Should I take my screen?
Go for it. I think everyone's done looking at JPOW for now.
Okay, thank goodness. All right, let's get out of here. I'm not a big fan these days for a lot of reasons. But anyway, trial and error. So you can basically pay for education, or you can pay for education by losing money. So I focus on options, but I spend a lot of my day chatting with traders like you and in the Benzinga chat room. And we discuss the opportunities, we discuss charts. I've also figured out how to read charts, and not only that, explain them in plain, simple English. So you've heard a whole bunch of patterns out there, the technical this and technical that. I figured out to weed down the important ones that actually matter and how to put them in plain, simple English. In other words, Main Street investing versus Wall Street investing. And we do pretty good, pretty well, I should say. And as far as what I do now, 100% of my time is spent with either doing my own stuff or time with other traders trying to spread the word and basically empower everybody to do whatever they want. So I'm not going to influence you as to how to trade. Hopefully, I'll just tell you, show you the obvious mistakes that can be avoided. So like Neil said, number one is protect your wealth, right? Before you start being successful in trading, you have to make sure you're not throwing money away. And there are easy mistakes to avoid. So today we're going to focus on risk, the definition of risk. Everybody, yeah, that's a good pun right there. So everybody thinks they know the definition of risk, and everybody probably knows what it is. But I think that if we put it in the way I like to put it, it becomes more important, especially with options traders, because we do know a whole bunch of stuff, and we do use it at a level where it makes total sense to just break it down to its elements. So I'm going to give you a minute, and I'm going to ask, tell me what risk is, and I can guarantee you that unless you've seen my spiel before, that you won't get it right. You will get aspects of it right. Nobody will get it wrong. How about that? But nobody will put it in a way that I like to put it that is pretty clear. So go ahead, give it a shot. Money, okay. I'm seeing elements, good, good. Opportunity to try, good. Oh, I see elements, okay. So you see how everybody's bringing in the main idea, how much money I'm gonna lose, volatility and all of that. Somebody else brought the other ingredient. So I'm going to save us and take a scratch pad. All right, so everybody can see my screen, right? Right. So here's the way I break it down. Other than the actual goal, the carrot, so to speak, risk is two pieces in my book. The first one you all got right. How much money am I going to lose if I'm wrong? Basically, what's at stake, the consequence. This will decide whether I play the game or not. And I should take a risk that's not too big, that's going to break my bank. I don't care my level of conviction, that is not allowed. Second part of risk is, what are my odds of losing? So it's good to know how much I can lose. And then the other piece, which a couple of people, only two people that I saw, I mean, it was moving fast, so forgive me if I missed you, actually mentioned it. What's the likelihood of me winning and losing? And people say, I manage risk, and they mention how much money they can lose. I tell you that this is not managing risk. This is determining risk. This is managing risk. So the way I manage risk is, over time, whatever happens in the industry of that trade I took, in the price action of that trade I took, in the price action of the entire market, and the taper, and the this and the that, how does this change from the day I took it? So if my assumption had I assigned myself 60% or 50% or 80% or 90%, if that percent drops below my tolerance level, I should get out. That's how I manage a trade, by managing this part, not that part. This part should stay the same. Don't average down. Okay, there are some exceptions to it, but as a rule, if you don't average down, you avoid a lot of mistakes, because people, when they average down, is usually because of a bad trade, and they do it on emotions, and all they end up doing is making their problem bigger. That's my opinion. Smart traders can use the average down method to get out of trouble, but as a general rule, unless you know exactly how to use that method, and it's not easy, trust me, if you don't know charts and you're not patient and you can't see pain, averaging down usually creates a bigger problem than you need to. So risk, the definition of risk is first establish the amount that's appropriate for that trade. And the amount is different. If it's a trade with conviction, meaning an Apple-like company, then okay, I can set a bigger risk than before, than something else. And if it's a speculative bet, I make sure it's a small bet, and I make sure to most definitely not average down on it. Like I tried to tell the highly on investors that as soon as it lost 18, do not average down. They cussed me out, laughed at me, called me all kinds of names, and here it is. So don't average down, especially in the frothy names, and establish the risk and walk away. So this establishes risk, this manages risk. That is the focal point. And why is it that I like options? I'm a numbers guy. I'm a prior engineer. So I like, give me a set of circumstances and I'll structure something around it. I'm a bad guesser. It seems like I guess well. I don't. I see a set of circumstances and I lay out the scenarios and I say, okay, this looks a more likely scenario than the other one. So it seems like a guess, but it's not. And the thing I like about options is this number, this percentage is an actual number. I don't have to assign it to myself. I just have to choose it. We'll talk about that a little bit later. But this is why options are, it's a quantifiable thing. So I don't have to make a judgment call. And you say, oh, okay, so sometimes the metrics are wrong. It doesn't matter. I'm using the same metrics all the time. So if they're wrong, it's like using a bent ruler. If I use the same ruler all the time, I'm going to be consistent. And trust me, the performance that I've been delivering into Benzinga feeds, they come out to the level of the risk I put. So if I set a trade and I say it has an 85% odds of success, and I consistently deliver 85% odds of success setups, they work out to that percentage overall. And if somebody books profits along the way, doesn't try to squeeze every penny out of every trade, they can get pretty close to perfect on selling options, not buying options, which is another conversation we'll get to in a little bit. So that is the segment where I usually start with that, basically to tell you why. First of all, this definition of risk should be applied to any investment opportunity, whether you buy equities, you sell equities, whatever. That's the method. In fact, this method applies to anything, even if you're taking risk in sports. First, what's the consequence? Am I going to break my arm or die? That's whether I do the jump or not, and what are the odds of me, clearing the gaps? The same logic applies to everything. In investment and in options, it is so clear. It just makes it I say it's an NT. It's like an acronym I use in the chat room. It's no trigger, no trade. So if I don't have a reason to take a trade, I shouldn't take it just because I feel or it looks like. Nope. If there's nothing there, sometimes I vary the second T. So the first T, no thesis, no trade. So maybe I don't have a trigger on the chart. Like maybe price did not cross here, but I can say it's falling into prior support. So I'm going to take a bet that the support holds. So that's my thesis. Therefore, now I know if the support doesn't hold, I'm out. My thesis was broken, I'm out. So no thesis, no trade, no trigger, no trade. It's an NT. This keeps me out of trouble. Then I am less likely to go out and say, ooh, it feels like a good time. Oh, it seems oversold. What the heck does that mean? It seems oversold. Yeah, tell that to wish buyers like me. It seemed oversold. Yeah, it wasn't. So have a reason to take a trade, then you become less of a guesser and more of a, hey, I see something, let's chase it. And if that something disappears, I know to disappear myself too. It's okay to book a losing trade. Like I have had today, people come into the chat room, somebody said, Rocket, a stock I like, the mortgage company. They said, I'm down 70%. Sorry if you're in the room, I'm calling you out, but I didn't say who you were. So I'm down 70% on my call for October. Can I salvage that? I said, you can pray really hard, because the action on the naked call, there's hardly anything you can do, because they bought it and they didn't hedge it, and they didn't, most importantly, have a stop loss to get out. It happens. I've been there before. I am in that same trade, but I've been selling calls against it, so putting it to work. So my cost basis is a lot lower. So we've all done it. We buy something and we hang on to it. It feels like it's going to turn around. It feels like it's turning around. But if I don't take action, I take a bath. I'll give you an example from me today. I took a bet. It was a trade on Wish for this week. I sold the put spread. So basically, I needed it to be above 6.5. Okay. And today, it showed a lot of promise, big volume, 6.25. That number got me out of trouble. It went from a complete loser this morning to almost break even. Guess what I did? I didn't sit hoping it continues higher. I closed it. So my reason, it was a gift, I got out. So if somebody has the ability to take a loss and book a profit early, that's a huge step forward. That's a pitfall for a lot of people. They see, I have had, again, today and yesterday and the day before that, almost every day, somebody come in. I suggested going long UPST. You know the company? Let me show you the stock if you don't know the company.
I've been seeing so much about UPST lately.
Okay, so maybe you saw the write-up I did for it. It was like down here. I said, this looks like a breakout. Let's go. Or it was falling. I think it was falling, and I said falling. Anyway, somewhere in this box, I drew these lines and I put these boxes, and look at where it's at, right? And I still keep getting people saying, should I book my profits? What? I would have been out like here, if not here. In fact, I was. And so if you're asking my permission to book profits up here, you need to practice booking profits on your own. This is a slam dunk. Of course you book profits. This is, how much more do you need in order to have the courage to miss out? The fear of missing out. There's always another trade somewhere else. I miss out all the time. But over the years, we've been doing this, how long with Benzinga? 10 years, 11 years, something like that. There are more of these situations everywhere. I mean, they're not all huge home runs like this, but if I get a home run like this and I still can't book profits without somebody telling me to, I need to practice booking profits. Otherwise, I'm going to have a lot of disappointments. If something rallies, I buy it, and then I can't get out of it. I give it all back. So I do share trades, and I keep statistics on the trades and the performance. If somebody books 15 to 25% wins, they've had greens from almost every trade I offered. Who loses on the trades I offer? First of all, I offer trades with like 4 different flavors. Buy a call, which is my least favorite. Buy a call spread, second least favorite. Sell a put, my favorite. Sell a put spread, second favorite. So if you choose the buying parts, then if you just sat in them hoping they continue to deliver, then the winners were massive winners, like Netflix, for example, and that's the last one that just springs to mind because it was just this one. And if you don't, if you just sit waiting for full profits from all these, buying calls and buying call spreads, you probably rode them back down because nothing rallies and stays up. So if somebody books along the way, they have fewer opportunities to make mistakes. So this is the point of the risk management thing. With options, we have guidance. We have information from the actual options chain. This is E-Trade. I'm not recommending it. I just use it because it's fairly straightforward and simple to explain and talk to. You have the puts on one side, you have the calls on one side, but each one of these gives us a theoretical chance of success or failure. And that is key to, it makes it so tangible. when I like this company. Like, give me a thing. Yeah, I like this company and I want to get long. What are my odds of success? Hey, options will give you an exact odds of success. Ford. All right. So somebody threw in Ford. By the way, we went long Ford last under 7 or in the 7s. Okay. So somebody came to me in the chat room the other day asking about Ford. So let's look at the chart first. Okay. So let's go. Hold on. Was it just now? All right. It's going to take me too long looking for it. So trust me, it's in there. Somebody asked. It was falling. And I said, okay, so the thesis is it's falling into support. If you get long, stop yourself out because this potentially could happen. If you're in it for an investment, then don't take all in, because then if it does fail, then you get the chance to get your full position down here. This is not averaging down. This is splitting the entry into 2 pieces. Okay, different than averaging down. I'll give you an example. If I take 100 shares usually, and I take 100 shares right here and it falls to here and I add another 50 or 100, that's averaging down. If I usually buy 100 shares, I only buy 50, and then I buy the second 50 down here, it's not averaging down. Okay, this is F, Ford. So if somebody took my advice here and it got to here and they didn't book and it was a trade, then they don't usually listen to me. This is where I just take some off the table until it takes that resistance out, and then it's on its way. This is a nice move on Ford. All right, so in this case, if I wanted to buy into Ford and not buy the company, I can go into the options chain and choose a time frame that suits my style. Let's say it's a long term, a few months, and I want it at 14. Then I can buy the 14 call, and it tells me, I'm at the money, so it's basically 50-50 shot. So then somebody will say, I'm willing to take 20% pain and then I'm out. They've already set themselves a stop loss level. And what if price falls a little bit or time ticks and it's not moving? Then that 50-50 odds changes. So maybe they say, okay, I haven't lost 20%, but now my odds are down to 30%. I don't want this. I close it. So that's another way of doing a stop loss. But all this is discussed all day in the chat room. And if there's a great benefit from the Benzinga offering is to have a venue like this one, and where we can go back and forth. Like right now, these comments are coming in now and they're not supposed to be in the room. It's aftermarket. So I'll have, as soon as I'm off with you guys, I'll have to go in and catch up. And I see some Nike comments, and here's the thing here. This is what I just shared in there. So Nike reported tonight, right? I think it's falling right now. I said, whatever bet you're trying to take, don't buy options for this week. If you did, you overpaid. How much is that? 5 times? So it's a huge discrepancy. So I said, if you're looking to bet up or down, I would be selling this week's and buying next week's against them, because next week's are cheaper relative to this. So tomorrow, when the market opens, this is going to go whoop, straight down to here, and they're going to lose more than half just from that fact alone. The implied volatility, the nervousness of the option, they're going to reprice so much lower because the event is out. And right now, at the time it was so expensive. Tomorrow morning it will be nowhere near, and this week that they bought will not lose as fast as this one. Therefore, their trade will be so much more in better shape. So that came out because somebody asked, hey, who's reporting? They said Nike and Costco. And I jumped into Nike. Somebody's asking about Bitcoin here, basically. And I jumped into Nike because it was the first one that hit it. Somebody else, Quant Demon in here, was saying they wanted to get long the S&P on a thesis that we're going to close the gap, the S&P, the SPY. I said, okay, but watch the VXX today. If it's a fast trade, so I'm commenting in here, but he wanted to use, I think it's a he, wanted to use the S&P options for this week. So I said, revert to my morning note, which I deliver every morning with lines. And see the levels. And from my morning note, you see that we're into resistance, and that's what they're hunting right here, that little gap. And I already have a note here that's about 3 or 4 weeks old, 436, 446, super important levels. So that's also significant. So I said, watch the VIX, VXX, not the VIX, for this fast trade setup. I said, if it fails at 25.5, then I would take longs. Otherwise, I wouldn't. So you need to know, or you need help. So if you don't know all of this stuff, it's fine. Luckily, you can hop into a team and trade in groups. We have hundreds of people in there. See, somebody's asking, what is VXX? That's the kind of conversation that goes in there. Once I introduce you to the VXX and you are an active trader, it's going to change your life because it's really shows you the opposite of the bid into the indices. So if you need a baddie, a bad guy, an ogre, your VXX is the ogre. So VIX is not really representative intraday, but VXX on a short term is. So the setup is always the same with options for me, because I found something that works. Guess what? I'm not going to reinvent it until it stops working. The discipline is the same. You have to work at your discipline, book profits, know when to cry uncle, so to speak. Those are two important disciplines, two important skills, believe it or not. I would call them skills. Not everybody can book a loss. Not everybody can book a profit, as we just noted about UPST. Trading willy-nilly is not good. So what else do we use? We use common sense. So when a stock is going out of control, I don't go out and say, let's go long. The easiest setups are ones where a quality company is falling into support, and especially on false pretenses, like Facebook yesterday. Did you read the headlines? I couldn't make sense of it. And I'm a pretty sharp guy. And I was like, what are they trying to say? And then somebody even went back to Cambridge Analytica. I was like, what is this headline? It was like almost humanitarian thing. I was like, wow. Anyway, we bought the dip. I sent out a note, immediate profits the next morning. In fact, immediate profits throughout the day. Even if somebody didn't get it in until the end of the day, boop, pop the next day. So those were ideal situations. They don't present themselves all the time within one company, but they're always happening somewhere. So if it's not Facebook, it's something else. Pinterest, for example, I didn't write it up today, but double bottom, maybe it swings higher. Somebody asked me about it in the chat room today. Maybe it'll be on the list. Sometimes things come out of nowhere. And I'll give you an example. So if I'm watching something, somebody says, check out this ticker. Gosh, I wish I can remember. Somebody pitched it in the chat room today. Open. He says, is it poppable? That's literally what they said. I was like, I haven't looked at it. Of course it's poppable. I can't believe I don't have an alert. And I'm going to put an alert right now. So if this one makes a high, if it goes above tomorrow, and depends on where it closed, this could be a really exciting opportunity, maybe even down 25, 26, or 27 in a couple of stages. So more reasons to be trading in groups or having help, because clearly that person is in here to learn. I know them, and yet they came back and they said, they showed me something I had missed. Imagine having thousands of eyeballs, because we have hundreds of people. If not that, I don't know how many people are in the room. I know there are hundreds. So we're not going to miss much. There's somebody looking at something. Somebody's asking, what is the support? Are you asking what is a support zone like this one? Do I use Fibonacci? I've got Fibonacci embedded in my eyeballs. Jack, don't ask me how. I can look at it, I can eyeball it. I do use Fibonacci, but not as a trading method. I do pay attention to it. And I do look at confluence, and I do look at a whole bunch of stuff. Lucid, don't ask me to talk about Lucid. Default starting time frame. If I never looked at the stock, I go to the daily and then drill in and then zoom back out. It depends on the thesis. All good questions.
So Nick, we are getting some questions in here about the subscription, and I don't want to spend too much time on it right now. But I was wondering if you could just give a brief survey of how the subscription works for the pro mentorship.
If I can?
Yeah. And then I'll give more details and answer questions. We'll just be real quick.
Okay, for the options, the pro mentorship or on the
pro
chat room?
mentorship.
Okay. So I spend my days, like I said, hanging out and chatting with other like-minded traders on Benzinga, and I do share my findings and I write them up, and I usually share a video in details, probably, wouldn't you say 12 to 15, sometimes longer minutes?
Yes.
So, and it's usually wordy, but I try to approach it like every video is its first to somebody, because I don't want to assume people have been in there for a long time. Maybe somebody just joined, like you're going to be joining. So you're going to see the macro as to what the world looks like. You're going to see the micros, like what the stock look like, and the thesis, why am I doing this? And you're going to hear about stop levels and opportunities. And you're going to see a write-up with 3 or 4 different setups. So I would, let me see here. Let me bring you an example of what it looks like, just to explain to you, because we don't all feel the same. We don't all like the same stuff. We have different methods that we like to choose, and so I offer many different ways of doing something. So this is my spreadsheet that I share, and the coaching goes back and forth all day, discussing this, any, or other opportunities. So think about it. If you join, it's like an ongoing classroom that goes at your pace. Yes, you're going to miss some here and there, but all you have to do is pop in and say, hey, what did I miss? That's for starters. So for example, Roku, I shared 4 different ways of getting long, 4 different time frames. 2 where we be buying stuff, debit call spreads, 2 different time frames, expiration dates are different, and 2 where would be selling stuff like credit put spreads or sold puts. These are my favorites. Same with Baba, same with Facebook. So there's something for everything. There's the theoretical odds of success, my description, faster, slower. Sometimes I say it's not for me, and things like that. So the mentorship, it's not a talking head. Yes, I deliver deliverables, and the team with Benzinga helps me with that as well. But it's also, every video is a lesson about something. Usually it's a lesson about the method, and more importantly, often it's the lesson about options themselves. Like somebody just asked within you here, do you sell puts, naked puts, or covered by stock or cash? So I will address that because it's part of the membership. For example, if I did offer a Facebook setup, and I said, okay, so Facebook, if I wanted to go long Facebook, I can buy the shares and pay 100 shares times $345. That money leaves my account now. And what are my odds of success? Anybody? If I buy shares of Facebook, what are my odds of success? 100%? No, my odds of success are 50-50. The stock can go up. Yes, thank you. The stock can go down. I think I can give myself some edge by doing homework and having a thesis, okay? So with options, I can actually do so many different things. Instead of deploying that much cash out, 100 shares times 345, I can deploy only $1,800. Well, in this case, I would never do that. That's a lot of money for just buying an option, but a lot of people do it. And if you guess correctly, you make a lot of money fast, but you can also lose a lot of money fast. And that's part of the mentorship program is I share these things in the video. I say, okay, so sure, you can buy a call. So what does that mean? If you don't know options, I know there were a few ones here that said 1111. So by buying a call, I'm spending $1,800. It's $18 here, but every call represents 100 shares. So 1,800 is $18 times 100. And that is how much I'd be spending today. So what does that mean? What happens when I do this? It's a contract. There is a seller on the other end, okay? Somebody that's collecting that money from me. And I'm the buyer. I'm in control. They're the seller. They have to live by my decisions. So what is my decision? My decision is I want shares, but I don't want to deploy all the risk right now to buy all the shares. I'll reserve my price. And for that, it's $1,800. And it is for the next, what did I pick? December? Okay, so for the rest of the year, I can buy the shares at 350. That's what this affords me. Okay, so where did the shares come from? From the person that sold the contract. They're committed to delivering shares at 350. Why would anybody do that? Maybe they have shares that they've been writing from 100 and they want to get out at 350. This way they can hold them, collect dividends or whatever. And then one day I may call them, hey, give me your shares. But they locked $18 worth of profits right there. So they have their reasons. I have my reasons. So this is one way of getting long a stock with less money out of pocket. So this is what makes options dangerous, because it's $1,800. You're saying, but I'm going to make so much money. Yes, if the price rises, this $1,800 turns into $3,000 in no time. Then I don't have to buy shares. I don't have to own shares. I just sell it. I paid $1,800 for it. It turned into $3,000. I'll sell it. I made money without having to own the shares. So what's wrong with that? What's wrong is because what if you have a down day? Then you're down 14% in one day. So today the stock was up 0.8%. Somebody that bought puts yesterday is down 15% on their money in one day. So boku bucks, okay? That's not my style. I usually say it's available for somebody that wants it, but I'll say it's not for me. So what I would do is turn it into a spread, which lowers the out-of-pocket expense. Now it's half price. Lowers the maximum gains, but it's still a huge win. And most importantly, on a bad day, the pain is much less. I can sit through a couple of red ticks and not having to be stopped out like I'm a futures trader. So where I put the spread is up to me. How wide I make the spread is up to me. So I'm in control and I can set my percentages of success. How aggressive do I want to be and how much of a lottery ticket I want to make it is all up to me. So it's pretty flexible and there are so many things I can do with it. Putting a bet right here is a 50-50 shot, $250 out of pocket, $250 to make if I'm right. If I want to make it more of a lottery ticket, I'll move everything up high. So now I have much lower odds of success, but much more money to make. It's like lower odds, more money. It's a bigger bang for the buck, but I need a big move to win. Okay. Yes, I do all of these. So somebody's asking something. So what is my favorite way? So I'm going to introduce you to, somebody asked, selling a put, right? So let me ask you this. What is easier, to find where a stock is going to go, which is usually one place, or to find all the other places where it's not going to go, right? How easy is it to say, I don't think Facebook is going to go to $280 in the next 80 days, right? I mean, it's fairly easy to say. I don't think Facebook is going, let me take out all the lines. I don't think Facebook is going to go to here in the next 85 days. Is this easier to say, or I think Facebook is going to go to 390 in the next 85 days? Which is easier? I'm more comfortable saying it's not going to go to here. And here's the second layer. And if it does go to here, the worst case scenario, if I'm wrong, is I own it there. and I don't participate with all of this. 17% drop, I don't participate in it. What kind of trade gets me there? Let me tell you, selling a put. Now, I'm starting with an experienced trade setup. Selling a put should not be taken willy-nilly. Somebody that can and wants to buy shares can sell a put. Otherwise, it's a very dangerous method of making money. It's still less dangerous than buying stock. And this is where, that's the one I can prove to you that options are not by rule more dangerous than stocks. In fact, they can be much safer. And this is one scenario, and let's walk through it. Okay. So if I sell a put versus somebody buying the put, if I'm selling the put, I'm giving somebody insurance. So Bob out there owns 100 shares of Facebook and is worried about it dropping below 280. So he wants to buy insurance at 200 and at 280. He's willing to take pain to 280 and then get out. So I'm the guy. Bob, I got you. I'll take your shares this year. Anytime you call on me, I'll take your shares. So I collect money. To open the trade, money goes into my account. Nothing leaves my account. Do I need collateral value? I need cash in the account. That's it. I don't need to own shares. That's how I'm buying shares. I want to buy the shares. I sell the put. Bob gets his insurance. Win-win situation. Neither of us is bearish the stock. I'm bullish. I want shares. He's bullish. If he was bearish, he would sell his shares. So the time starts ticking as soon as I collect the money. So then what happens is time ticks, and if the stock falls, the worst case scenario, what did I say, 18%, is that trade shows losses, but then the losses disappear once they give me the shares, if that's what happens. Okay, so the worst case scenario is I own the shares at 280. So what's my break-even point? I'm going to round this being $4, not 3.8. Then my break-even point is 276 because I collected $4 to open the trade. I don't need to have shares to sell puts. That's how I buy shares. I want to buy shares, I sell a put. I'm promising somebody, when I sell a put, I am promising somebody that I will buy their shares at that price. If I get assigned, I keep the credit. Yes, that's Attila, thanks. So if I get assigned, meaning I wake up, there are shares in my account, that put I sold disappears. It takes all of its losses with it. And instead, I own shares at 280 and I keep the $400 I collected, which is the premium I collect today if I continue with this trade. So my break-even point is 276. So let's take that scenario with somebody that actually bought shares the day I sold the puts. I sold the puts today. I collected money. I don't own shares. Somebody bought the puts today. Bought the stock today, out the money, the whole shebang, $345 a share. And then the stock collapses to 275. Okay. So they are down 20% eyeball. What am I down? $1. Because I didn't buy it until 280 and I had 4 to play with. So I'm only down $1. Tell me which one is safer, buying shares or selling the put in this scenario. Of course, selling the put was much safer. I avoided a 20% drop, made it into $1. So that's how selling the put is safer from that perspective. Selling the put for somebody that's trying to make a trade and not being able to buy the stock then creates complications. Over the wheel if you get assigned. I don't know what that means. Okay, somebody's asking, what does mark mean? Mark is just the price of, it's basically the middle between bid and ask. I don't care about bid. I don't care about ask. This is a liquid stock. The price is going to fill at the middle between bid and ask.
Hey, Nick, really quick.
Yeah.
Jasmine, and Jasmine, I totally relate to this. This was me a little while back. She said that you lost me at selling puts. Now, I just want to say, Nick, that I ran a poll while you were talking.
Yeah.
And it was this question: who makes more, realistically speaking, money over time? Who makes more money over time? People who buy lottery tickets or people who sell the lottery tickets? How does that apply to selling puts?
Okay, I'll tell you. So why do you think casinos exist? Because the house always wins. If the house is losing, then they won't exist. There are options because market makers never lose. So if you're buying stuff, your opponent is the market maker. So by default, you're playing against the harshest players out there. So if I sell stuff, so I'm glad you said this, Neil. So the first thing you hear about options, if you go to an options class, most options expire worthless. So this is where you throw your books and say, I'm out of here. Why on earth would I want to buy any options? Because selling is the easier wins. So somebody said, you lost me at selling a put. So let's backtrack. I'll wrap it up. Let's backtrack to the definition of risk. I think I had everybody dialed in at that point. Okay, so everybody was on board with the definition of risk. Remember, it's the amount of money I can lose and the odds of success. Okay, so I'm going to back into it with the odds of success. This column right here is called the delta. This column right here is called the delta. There's a delta for the calls and a delta for the puts. Ignore the minus sign. This is your odds maker. Okay, so let me put it in plain, simple English. This is your odds maker. Current price for the stock is $346. So this is the 50-50. So any price, any option around here, or even on this side, is about 0.5. That's 50-50. Okay, so the further down I go on the put side, the lower the odds goes. Look how smaller the numbers are. Can you see these numbers? So going down to 280, it's 0.11. So basically, barely a 10% odds that price will be there in the next 45 days. Based on the market makers, these prices, basically I say these are the market makers telling us where it's going to go. They think that there's a very little chance price will be here. Very high chance price will be here because this is where it is. Very little chance. The further I go up high, let me show here, show 40. So if I go in the calls, the delta that's way up high, look, the higher I go, this one has only like an 8 or 9% chance that price is going to be at 420 in the next 85 days. Doesn't make sense. So if I buy a call here, I have a 50-50 shot. If I buy a call here, am I going to win or lose? Most likely lose. So do I sell this call or buy this call? I say don't sell calls. I'm just using it as an example. Same with here. The chance of Facebook being at 225 this year is like 3 or 4%. What are the chances of being 225? Very little. So if you pay $1 for this put, you think you're going to use it? Do you think price is going to come to it and make you win money? No. So selling it would be the smarter thing to do, correct? So pick your risk level, and that's where I would sell my risk. So if I'm a super conservative person, I would sell it down here. Like, I don't want to pay more than 225 for these shares, so I'll sell the 225 put. So I'll give Bob insurance, not at 280, at 225. Of course, Bob pays me a lot less for it. Up here, he was willing to pay me $400. Here, he's going to pay me $100. Okay. So basically, I'm selling either insurance to Bob or a lottery ticket that's going to lose. If somebody wants to short Facebook, they can buy a put. That's how they short a stock. If price falls, their put gets more expensive. They sell the put, they made money. Well, in this case, if somebody's doing that, they're buying this put for $1. They need a catastrophe for them to make money. The market is telling them there's no way this is going to happen. So if I'm that person that agrees with the market maker and I sell this, I'm going to collect $100 here. The only way I can lose money is if Facebook gets down below 225. So that's where 224 actually. That's where selling the put idea comes from, that it's a higher degree of success. finite amount of money. You can't win home runs like the UPST because the maximum I can make is the money I collect up front. But talk about consistency. Holy crap. Yeah. This is as consistent as it gets. So if I don't fight the market maker, and this is not fighting the market maker. In fact, the market maker loses money if Facebook moves more than 40 bucks. That's a longer explanation. Don't ask me why, but you get in the chat room, I'll explain it to you. If the price moves more than 40 bucks up or down, the market maker will lose money. So if I sell a put or a call spread above or below $40, then I've got the market makers working for me. If I sell a put, do I need 100 shares up front? No. You don't need any shares to do anything in options. That's a fact. So I can buy a call, I can sell a call, highly don't ever sell a naked call, ever. But you can, but don't. Buy a put or sell a put without owning shares. 40% out of the money is my to-go. Renee has a system. Good job. What's a naked call? The term naked means one option all by itself. So let me backtrack. So I mentioned naked. I guess I should have defined it. If I buy this call, I am buying a naked call. If I sell this call, I am selling a naked call. Again, don't ever sell a naked call, because that's effectively you're shorting the stock. And if GME situation happens, you go bankrupt. There's no joke about it. You will go bankrupt, because just like shorting, it's not because it's options, because you're shorting a stock. When you short a stock and it goes up, so when you invest money in a stock, your maximum risk is 100%. You invest 100,000, you invest 10,000, you invest 1,000. That's all you can lose. When you short a stock, your losses are unlimited for as long as the stock is rallying and you're not covering your short. So do not ever do it. 2 calls equals 200 shares. Yes. So Todd, if you're looking to buy 200 shares eventually and you want to lock your price, you would simply buy 2 calls. You wait until expire. No, I said that earlier. If you want to squeeze every penny out of every trade, you're going to suffer. You're going to have a lower score. Let's see here. You'll do better closing early. Even if Facebook price goes up, you still collect. Yes. Okay, Chris. So when I sell a put, if a stock rallies, I make my money. If a stock doesn't rally, I make my money. If a stock falls, I make my money. If a stock collapses, maybe I lose money. Maybe I lose money. Only one scenario, maybe I lose money. Now, you buy shares, you need a rally to win. The stock falls, you lose money. The stock doesn't rally, you lose money. The stock rallies, you win, you make money. That's the only way. You buy a call, it's even worse because you're on the clock. You also need a move. You buy a call spread, you need a move. You sell a put or you sell a put spread, you need nothing to happen. That's how you make your money. If nothing happens, you make your money. You need nothing to happen, absolutely nothing to happen. Oh, speaking of nothing, what about iron condors? Have you heard of iron condors? Okay, how crazy was the market last week and this week? Pretty crazy. So I author the people in the chat weekly iron condor table. I say, here they are. I usually share 8 or 9, I can't remember. Both weeks, all winners. In a crazy market, that means what? Much ado about nothing happened in the last 2 weeks with a taper tantrum inside. What? Yes. So don't get sucked into the headlines. Guess how much headlines we cover? Nothing. No headlines. We don't cover headlines. We don't trade headlines. We just trade charts and fundamentals. That's it. So I sell Bob a put and collect the premium Bob pays. No, you don't take additional steps. That's how it happens. Check it out. Somebody is basically saying, how does it happen? It's as simple as this. So say I pick a put I like, I click on it. I said this is here. I say, okay, I only want 100 shares. So sell it, and then this will be it. Preview, and then boom, order. And as far as what it looks like, let me show you some. Okay, hang on. Let me show you something. Perfect, right here. See this? This is an actual trading practice account, right? So this is a Zoom trade setup. I can't remember when. Hold on, maybe I can find out really quick. In the last couple of weeks, what just happened? Anyway, in the last couple of weeks, I said Zoom was looking for a bounce, and it did work for a little bit, but part of it was buy upside, a debit call spread, which is like buying shares that you want. You need a move up to win, or selling a put naked, or selling a put spread. So the trade stalled. The price stalled after the initial pop. So somebody who just bought stuff and they didn't book, now they're red. They paid $4. Now it's worth just under $3. Somebody that sold the put, they're still green. Somebody that sold the put spread, they're still green. Why? Because time ticked and they need nothing to win. They absolutely need nothing to win. So that's why selling stuff, I'm winning even when the stock is losing. All I need is a Zoom above 230. Zoom at 223 is break even for this trade. And I don't own shares. And I close the put by buying it back. I rarely let it expire worthless. Here's an example. This is Match. Also, when it was falling, I said it's falling on false pretense. It's going to do well. So we bought the dip, sold a put spread, like selling a put concept, only with limited risk. And it collected 75 cents. Now it's worth a little bit less than half. So the trade is green. So all I have to do is buy it back to close it. So I collected 75. I'll buy it back for 31. The difference is my profit. I usually pick like 1 or 2 contracts because I do hundreds, and I just want to just show the trade without, like, I'm not trying to make money in this account. That's a practice account. So on 2 contracts, I made $85 out of nothing. There was no money out of pocket for this trade. Zero money went out of my account. The day I opened the trade, I collected $150. Now it's worth 62. So I can pay the 62 and take the trade off. The difference that died from somebody else that bought it, like me, I'm losing money on this one. That's because I bought it from somebody that sold it. Yes, you missed it, Benali. I have a 15-minute video with every trade from start to finish. When I bet the price is going down, I buy a put spread or I sell a call spread. How do I close a sold put? I just said it. You just buy it back. So if I wanted to close this one, I just say, okay, close it, and it's buying. I would be buying it back. So I'm going to, let's see here. If you're still tentative about joining and why do you need to join, if you were in this room in the last couple of weeks, you would have gotten a Catch the Falling Knife on. And let me see, I think Neil had them on the front page, at least 2 or 3 of them. There was the Roku was on there, right? I think you said
XRT. It was XRT too.
XRT, Roku, Facebook was on there. So these are knives we caught. And Roku was a thesis. It wasn't a falling knife. It was just a thesis, I think. Anyway, so today Roku gets upgraded. That it was a total win. Facebook was, and before, like 2 days ago, I said, before the week started, what did we say? Before the week started, I shared a video, a strategy video, which also you will get part of this deal. I share a 10, 12-minute strategy video for the week. In it, I said, my bet is that the Fed will say nothing new, and they will baby the markets, and the markets will rally. And they did. That's what they did until the Q&A section. But I said, because of that, I want to be long into the Fed event. And then I shared, okay, today the trade is simple. I shared it. I'm going to buy SPY calls or call spreads, SPX calls or call spread. And guess what? Those were massive wins on a taper tantrum. So it was a slam dunk decision. And it was a pretty easy setup. So I shared a SPY or QQQ setup, and they were both winners, whether somebody chose the NASDAQ QQQ or SPY setup. And it was a debit call spread, because I told you I don't like buying naked calls, especially into an event where the implied volatility, the markets were nervous, they were charging too much for everything. So I said, buy a spread, then you neutralize that effect. When I get assigned anytime, or when options goes beyond agreed strike? Great question. Guess what? That's a secret. Shh, don't tell anybody. You can get assigned anytime. It rarely happens, though, when price is not at the strike price. So the buyer of the option, if you're selling the put, the buyer of the put can say, hey, take my shares, even if the price is above it. People don't know that. But they'd be morons to do that, because they give you immediate profits on top of the money you collected from them. And I'll give you another scenario. I sold a put in X last year. Letter X is US Steel. I sold a put somewhere when it was falling here. I sold a $9 put here, this level. It fell to here. They didn't assign me shares. It fell below $5. They did not assign me shares, and I still made money on the trade. The details are funny, but you don't get assigned immediately. If there's time on the clock, for some reason, some people drag their feet. I don't know what they were thinking. Why on earth did they pay me for the put?
Right. This is some really good stuff here, Nic. And number one, I do want to thank all of the members here that are here, just to keep getting sharper on the options education on these workshops that we have. We're getting a lot of questions here about Nic's chat room. So I just wanted to give in, just fill in that gap a little bit, guys. We are offering a 50% off the options mentorship with Nic Chahine, which does include Benzinga Pro, which is that beautiful platform that you have in front of you. That is the chat room. As you can see, Nic is literally there all day. He's there very early. He's there very late. That's literally like his second house. But on top of that, right, you get the chat room, but you get all of the features that come with Benzinga Pro. This is not just a news feed. We do license these things out, and it's a basic news feed. This is the whole package. You're getting everything. Insider trading, watch list, IPO calendar, FDA calendar, Squawk radio, the chat with Nic, of course, advanced news feeds where you can filter by keywords, analyst upgrades, Benzinga exclusives, which is when we do PRs. As you know, Benzinga is a financial media company. So we have all of the relationships when it comes to news. And just wanted to make sure to clear that, because Nic uses Benzinga Pro almost, well, every day. He's in the chat, but he also uses it to do his research and be able to give you guys these picks. Because remember, you can have the education, but the tools really make it better. And as you can see, anybody in the chat room can ask anything options related, and Nic will throw a chart just like he's doing it now. I remember about 2 months ago, everybody was asking about the Chinese stocks, and Nic was like, I don't want to touch them, but if you force me, this is what I would do. And literally everybody in the chat banked on that. So this is great. As an options trader myself, I can tell you that I wish I had this when I started. I was only doing calls and puts like maybe a lot of you guys are. And it took me about 1.5 years, till I found Benzinga, and then I found Nic, and he mentored me through this process behind the scenes, obviously. And we just decided, hey, maybe we need to, help other option traders, because there's a lot of misinformation out there about options. You'd be surprised. You just go to YouTube and you'll see all these kids, saying whatever they got to say to get views. At Benzinga, we do things a little bit differently. We are 100% for the retail trader. So we care about your long-term success. And what that means is that we're not here to tell you that, this is for lottery tickets. This is not for you guys to get 10 baggers or anything like that. We're looking for consistent long-term account growth. We're looking to protect our capital. We know that you work hard for your money. That is why we are very serious about this. The education, yes, Christopher, this is almost like a one-on-one with Nic, basically everybody there. And let's not forget, we do have the chat member sessions only on the weekend. That is Sundays. Is that 7 p.m. Nic Eastern?
What?
The sessions with the chat members
early in the morning, so they can have their day.
Okay. And so the link is always going to be there in the chat, and you can always just, ask in the chat. Somebody will send it to you. I've personally signed up a lot of people there, and it's just great to see the improvement. It's great to see that there are even a lot of advanced traders that really benefit from Nic, because ultimately having Nic there as your filter is the best thing that you can have, because honestly, it's much better to make a trade the right way than to rush to it just because of emotions. You're looking at the stock go up, and you need to have a plan. Nic always has a plan from the morning. And I talk to a lot of you guys, and that's the main issue that I find when I'm asking for feedback. Or, personally, I had it like I blew up my account twice when I started trading options. And a lot of people have reached out and they're like, hey, that happened to me too. Well, this is not a non-common thing. It happens. Like if you don't have options education, it's not going to be it's going to be an uphill battle 100%. Some people lose money. They don't even know why. And the worst part is that they jump in there with all of this, all this money, and then they lose it all. And then I get that call like, hey, Rodrigo, I'm down 200 grand. I would, can you get me some education? And the answer is always going to be yes. But like, I just wish that, this person would have reached out before, because that's really what we're doing this for, right? We are being proactive and giving you guys the options education here so that we could possibly save you from blowing up that account for the first, second, third, fourth time. And it's all about having a plan, trading with a mentor like Nic. This man has written books about it. I learned everything about spreads from him. And if you're just doing the calls and puts, that's the recipe for blowing up your account, being up 100% one day, being down 70 the next one. And, not a lot of people have that kind of stomach. But as you can see there, inside Benzinga Pro, just where we were going over before, Benzinga Pro has a lot of tools that you can use, right? So you have screeners, you have signals.
Yeah, somebody was asking about screeners earlier. That's why I popped in here.
Yeah.
And I was pointing at these because they're automatic bottled up ones. And then you can get fancy if you want to add filters. So
yeah, that purple button is the unusual options activity, and that is included for today, right? Today we have the special deal going on. So it does include the unusual options activity. You can filter that bad boy by your watch list. So many other things. Like I usually filter that by FANG, and I just get a touch. I get a feeling about how the main large cap stocks are doing. But if you see the movers on the far left, right there, Nic, see the far left, right, there's like two arrows going different ways. In the like left, far left side, you can see there, you got the movers tool.
1 second, I'm sorry, I got a distraction over here. I'll get to you in a second. No worries.
Yeah. So you see there, you have movers, right? Then you have the watch list right there where you build your watch list. I have about 5 different watch lists. I have a short squeeze watch list, which is how I ended up getting on a firm calls, weekly calls today. You have your calendars. If you like to trade biotechs, you have your FDA approval calendars, economic calendars.
When in doubt, my default is go in and open a new tab and just kitchen sink. It's right there. I'm not joking. Cool.
We have pre-made setups for you guys. Obviously, I'm a custom guy. I like everything my way, right? If it works for you, do it your way. But if you're starting to use Pro, we already have pre-made setups, like right there, movers, Nic.
Okay.
No, that's watch list.
Yeah, no, I got you.
Okay, so that scanner, guys, it is the only scanner that is open from 4 a.m. Okay, everything else is regular trading hours. I know, I've been around. I've tried every single platform you can name. This is the only scanner that's open from 4 a.m. Well, pre-market and aftermarket. Everybody else just aggregates regular trading hours market. And if you're starting to scan at 9:30 after 5 hours and 30 minutes of trading, you are way behind the 8 ball. So don't wonder why you're always down a trade. It's not always your fault. It's really the tools that you have. And that's why we're giving you both. You have the full on education, mentorship with Nic Chahine. You meet up, even if you don't have time to be on the chat room, man. You can literally just go to these meetings on Sundays, and we meet there to adjust trades. We adjust the portfolio. We digest the news. Nic has literally been on top of this whole Fed Powell speech. So, and the correction that you're seeing right now. A lot of people are acting surprised. If you're in the chat room, you already saw this coming. You already made money on the way down. You already did what Nic told us to do. But just for today, guys, I want to let you know that we do have a laptop. Laptop included in the deal. This will expire at midnight. So as long as you're able to sign up before midnight, you'll be good to go with the laptop. The only way for you to get this deal is to call the number that's going to be on the chat right now, or email rodrigo@benzinga.com, or you can call 313-960-4061. So yeah, midnight tonight, Jacqueline. You're going to get the scanner. You're going to get everything with this deal today, right? So you have the Squawk radio as well, which is if I'm busy writing emails, you know what I do? I just turn on my Squawk radio and I let the news roll in, baby. All right. I hear something I like, I'm on it. I hear something I don't like, I keep working. And you'd be surprised. A lot of people that have full-time jobs do this, right? That's the Squawk radio. Some people even literally just have their Pro open on their phone because it's browser based, and you can do this from anywhere in the world. Tyree, we're going to put the number in again if you missed it. So yeah, like I was saying, this Squawk radio, some people literally just put on their headphones, right? They get their phone out, they open the Pro app, and they just let the Squawk radio go. You go out for a walk, right? You can go out for a little jog. You can go walk your dogs out, and you're always on top of the markets, right? So that's only one tool, guys. Remember that all the news that you're getting there, what Nic is going over right now, you get earnings reports. That little blue bar you see on the top, why is it moving? That's not automatic. We have a department of a lot of people there. Tyree, Randy, shout out to everybody that works really hard over there to give you guys these tools. It's why is it moving? It literally tells you exactly why it's moving. Okay, there's many other brokerages that literally they won't even tell you. Like brokerages, literally the stock is going up and there's no news why. Well, this is another part of the data that we do license out. So if you do see why is it moving on Robinhood, or why is it moving on TD or some of these other places, that is coming from the Benzinga house of data, right? Data is data, right? Nothing beats data. And we're able to package all of that inside Benzinga Pro with our proprietary tools, with our proprietary technology, so that you are able to get ahead of the curve, right? You're competing against equity firms. You're competing against people that have millions of dollars into doing their research. The least that you could do for yourself, like doing yourself a favor, is to get the tools that you need to be competitive in this market. Otherwise, it's not going to be, easy for you. Imagine no education and no tools. You might as well go to the casino, right? This is a little bit more serious. We want you to create real income, real revenue. There's a lot of people here that depend on it, right? Single moms, single parents, husbands and wives, trying to get business owners, executives, students, people that want to make real income long term. So that's why we're very serious about this whole thing with the education and all that stuff there. And that's the cool stuff. You look, Nic, the imbalance stuff, that's also really nice.
Yeah, the imbalance is always on my screen every day, just because people are so interested in it. Me personally, I'm not fast enough because I'm so busy with the chat room to be able to take advantage of it, but it's right there. I put filter, and by the way, keyword on top of keyword on top of keyword makes it so easy to pull up whatever you want to look at.
I love it. I love it.
So what I was going to say about I don't check, the only news feed I use is this one. I don't, because it, to the point, and I know when like the stock, the Nike is falling 3 or 4%, whatever, on the headline. So this is where I'll go and say, okay, show me the numbers, and this is the only thing I look at, and it's a mistake because it's falling because they missed what? They missed analyst expectations. They didn't miss anything. They clobbered last year's numbers, and this is where I say this is a mistake. Let me go look at the chart. Okay, so it's falling on a miss, but the miss is over an estimate. What if the estimate was wrong? So I look at the actual performance the last year, 15% and 22% increase the last year. So that's not a bad report. It's just a bad forecast from the estimate, from the analyst. So this is the chart before today. I had warned about Nike's downfall, and I was short, but I'm no longer short, so I'm not talking my book. And I said, be careful on the pop, because if it loses this line on the trend, it might come down to here. Okay, that was me saying it up there.
I remember.
It came down to here, and then it bounced. So when it bounces, it hits the prior failing point, and it's going to find resistance. So if somebody didn't book on this bounce, they haven't been talking to somebody who looks at charts, because this is where I would have said book it. So now tomorrow, it's right here at the blue line. So tomorrow, people are going to be panicking. They're going to be buying puts, and that's the wrong thing to do. So if it loses this candle, then it's a shortable event, and only until it hits this line, and then it's another shortable event to fill the gap, but not necessarily. So if I'm buying puts tomorrow at the open, I'm making a mistake. It's too late to panic. In fact, it's a buyable dip with a tight stop. That's the trading. So if somebody tomorrow comes to me and say, hey, how do I trade Nike? I say, buy the dip and stop out if it goes below this candle. That's the easy way.
That's the benefit of the chat room, no doubt.
And when it bounces, I'll tell them, book your profit if it gets to anywhere 158, because then you're going to find the people that were stuck up here, they're going to bail out. What are those lines? These lines are all drawn by hand, hard work. I don't have many. In fact, I only have one study, which is this one here, these bars on the left.
Yeah, and those are trading view charts, just so you guys know. And we do have trading view charts.
Oh, that's what's in here, yeah.
We have the trading view charts inside Benzinga Pro. So that's something that you do get included. But also, I do want to take a moment here. Just excuse me for a second, Nic.
Yeah.
I do want to mention, we do have a couple members here, and you know how we do it in Benzinga. We keep it real, and we love you guys because you're part of the family. So I'm going to shout out a couple emails here that just joined. All right. So Nazareth, Chad, Michael, Vargas, Heather, Timmy, welcome. That is the beauty of the community. The more, the merrier. The more eyeballs we have in the market, guys, the better it's going to be. So, for example, if you pick a trade and you just send it to Nic for him to filter it, it's so awesome, because literally Nic is basically digesting the news, the data, the technicals, fundamentals, price channels, macro, micro, and giving you the best possible trade. Like, for example, the other day, I came over to Nic and I asked him, hey, should I buy a call here? And he proposed a different type of trade, a credit put spread. It ended up working out better because the stock tanked. And you ultimately
I can't believe you just laid that transition point right there. Somebody's asking, so you're saying I should buy a call tomorrow in Nike? No, I'm saying you should sell.
No, he's not. But guys, look, Nike can go, well, any stock, it could go up, down tomorrow. The thing is, when you have direct access to Nic, that is what makes it better, because you saw what happened with the Fed speech. As soon as he gave that speech, everything started rallying, going here and there. Like, this is something that we were prepared for in the chat room. Carlos, the discount isn't applying at the checkout. We'll take care of that right now. Really, I think it's working for me, but if it's not working or anything, you guys can just email me, and I'll be more than happy to follow up with you guys. No worries. Just make sure to call that number below. But as an options trader myself, right? Because I started as the typical Wall Street bets options trader. I was just buying all these calls way out of the money. And I was like, oh, look, it's 30 cents, Nic. The call's 30 cents. It's so cheap, right?
Yeah.
And then little you realize, but the problem is I learned through mistakes, right? Usually that means that you lose money when you're doing these mistakes. What we're trying to avoid is that you are able to speed up your learning curve without taking the hits, right? Learning without the pain, and actually earning while you're learning. So that's our motto here. And, it's very important to know that a company that's been around for over 12 years, that literally it has the entire ecosystem of the stock market inside Benzinga Pro, along with a mentor like Nic Chahine with a 90% win rate and over 20 years of experience. There's nobody that I would want to talk to about spreads besides Nic, because everything I've learned, and I've been able to be quite successful with my options trading more recently, is because of Nic. Okay, Nic needs to you got to give credit where credit is due. And Nic is always providing educational content, like literally every damn day. He just put another video saying how to know which type of trade to make. Like if you got to do like a credit put spread, a covered call, or if you should buy a call or sell a put. He's literally giving you a video almost like once or twice a week with educational purposes, but the education is based on real life trades, right?
And every morning a plan for the day.
plan for the day. Nick is basically going over SPY, Qs, Dow. Look, if you're just starting to trading, right? Being able to chart and have a plan, starting with the indexes, right? A top bottom approach, finding pockets of strength. That's what you need to do, right? Because you need to be able to like kind of narrow down where you're looking at. And maybe Nick can tell us a little bit about that chart. What is that you're showing us?
Those are the Iron Condor updates about the ones that are going on this week. Look at the low deltas of all of them. So that means they're all worked out and they're almost at maximum gains. So I was telling them, if you took any of these, you should be closing them
in the green.
Yeah.
Yeah. And I remember the XRT. So, all right, Nick, you're famous for making a lot of good contrarian trades. All right. I'm going to start with the TLT trade, right? CNBC, Bloomberg, yapping all day. This is going to happen. This is going to happen. Nic Chahine on the other side of the ring is doing his research on Pro and everywhere else. And basically his research pointed that the crowd was wrong and that we were right. Eventually TLT rallied up. That was a winning trade for months, I think.
Yeah, it's been on for months. So other things come up in the middle of the day. Like somebody said, she asked, why is somebody spending X millions of dollars to trade something that's already in the money for this next week's expiration? I forgot what this was. It was 180 strike. And that was way in the money. I mean, price is still above here. They said, why did they spend so much money? I said, because maybe somebody is booking their profit and somebody else is covering their short. And then I looked and there was some also activity that matches up from different weeks. So we delve and explain all kinds of stuff that come up from all kinds of angles. Here is me trying to share tool results from something else. Mm-hmm. And but the consistent thing is the daily plan. You can't trade actively. This is somebody else trying to help somebody with Benzinga Pro. Somebody asked a question about Benzinga Pro, and one of the members came up and said, here's where you can find it, and circled it on Benzinga Pro. That's a Benzinga Pro window. So let me see here. I can't, it's here somewhere. Boy, I type a lot during the day. Holy crap.
Nick,
oh, there it is. Okay, the plan for today. This is 5:52 a.m. my time. I'm in California, so this is before the market opens. S&P, QQQ, IWM, futures, blurb about what's going on today, blurb about what to look for, blurb about my interpretation, and a video that I posted the night before. And this is, I said, what I do during the day, and an earnings picture as to who's reporting.
So all of that is given to you, I think, like at 8:30 before market open, Nick, right?
Yeah, this was 5:50 my time. So
5:50.
6:30 is when the market opens for me. So yeah, about within the 40 minutes before the open. Usually I post it. So here's somebody's asking, so do I recommend opening a call in Nike? That would be one way to catch the falling knife. So let's put it to picture. So tomorrow the price is going to open lower, right? Wherever it is now. Where is it? 154-ish. So tomorrow it's going to open here somewhere, right there. So people are going to be rushing to buy puts. The puts are going to be people panicking. See how they're down today because it was an up day for the market. Mm-hmm. So everybody's paying up for these. Look how hot these things were. So tomorrow it's going to be the opposite. The greens were going to be in here. Everybody's, whoa, let's buy puts. This is where I go, okay, here you go. Here's your put. Here's your put. Here's your put. So if I wanted to buy shares at 145, I could probably collect $300 to commit to buying 100 shares at 145. That's one way of selling a put to get long Nike. So do I need a rally? No, I just need it to calm down. I don't even need a bump. I just need it to calm down. I can choose October. I can choose next week's, which would be pretty active. I don't usually do that. I leave time on the clock. It's easier to manage. So I go out in time to where I'm comfortable with it and choose a time frame that suits me. If I'm going on vacation and I'm a slow poke, I go to December and sell it in the 120s. So there's so many things you can do. And I wouldn't buy a call. So tomorrow buying a call is going to be cheap, but you need a rally. What if it doesn't rally? And then it drops another day. That call is going to drop 30% and then you get stopped out. So yes, you did the right thing. You were off with timing a little bit, then you're forced to stop out. The call spread will be a little bit better. But the easiest thing is when people are panicking, wanting to buy puts. That's what happens when the stock falls fast. That's when it's fruitful to sell into fear with education. So I told you the education piece. It's into this candle. That's my assumption that this candle is going to hold. So I'll sell the put. And if it doesn't hold, then I'll have to change my mind and wiggle out of it. There are plenty of ways of wiggling out of it. And the next time to do it is down here. In fact, I'm going to do it right now. I'm going to set an alert. If it's anywhere near here, I'm going to start looking to get long, even though the gap is all the way down to here. Not every gap fills. Okay, so you just saw a live trade setup for Nike, and we did it in 5 seconds. Imagine if we can discuss it for another 20 minutes in the chat room.
Oh, they need to go to the Sundays, to the Sunday meetings you have.
Oh yeah,
those
and
are
the Sunday sessions, they're supposed to be 1 hour, but we're covering 100 tickers. No freaking joke. Sometimes 89, sometimes 110. So they are definitely 2 hours, 1 hour and a half, 140 minutes, 1 hour and 40 minutes to 2 hours.
Yeah, and the TLT guys, that was just one contrarian trade. Then you have, XRT, which was another beautiful one. Retail numbers. That's the thing, guys. Like if you're making your trades, right? You see something on CNBC and you're like, oh my God, I gotta buy it. That's literally the other way around, guys. That's when you don't buy it. If you see it at CNBC, it's too late. But that's why doing the research is important, because you need to be able to think ahead of the crowd. That's what we're doing with the chat room.
So this is the XRT that you just mentioned. So this was the chart I shared. Stop 1, stop 2, stop 3. The boxes I said I could sell a put spread here. I could buy a call spread there. So if somebody bought the call spread, they're already almost at maximum gains. If somebody sold the put spread, they made their money, which I did. Today I said I'm closing mine. It's like pennies. I'm just buying it back. But we bought it on the drop. The assumption was it will hold support, but if it doesn't, I'm out. If I have a strong tolerance for pain, that will be my second stop. If I have really strong tolerance for pain, that would be a stop, but that'd be ridiculous to stop out here. That's just way too late.
So this is catching the falling knife, because I know that I got a good trade with Pinterest that you put out a couple of weeks ago. That was another,
and it's coming up again. It's coming up again. Look,
live trade, guys. Live trade announcement.
No, but this was the dip, and this was the prognostication that this was going to happen. Well, they did the first leg, and they came back to test the floor again. So I can do the same trade again with the same stop. So this is the old stop that still works. As long as they hold this floor, you can redo the same trade again. So, but let's mention the last few trades. This was the XRT was one, the SPY was one. Let me take out the lines. That gets busy with the SPY. Whoops, sorry, didn't mean to do that. So the SPY was one. That we caught that. The QQQ was one. At the same day, we caught that. That was the Facebook was one, and BA. I didn't have time to share it because by the time I shared it, it opened up 3 or 4%. So it's like somebody saw my video ahead of time. But I did the video on the night before, but then by the next morning, poop. So I shared Facebook because Facebook that day dropped 3 or 4%. I was like, I'll catch that falling knives. Thank you. I shared both videos. BA, if somebody still wanted to take it, it was less as aggressive, but still available. But Facebook, and the next day it opened up and they could have scalped the win right away. Roku, also catching a falling knife.
I remember Roku.
When you catch a falling knife that's worthy of catching, you get rewarded, because usually people are wrong. This is a super aggressive company, not my favorite company. If you've been with me for a long time, you know that I used to make fun of this company. Well, things change. Look at this P&L. That shut me up, put a foot in my mouth. So, because I've been saying, where are the profits? Where are the profits? Where are the profits? Finally, there are profits. So this is an old company. It's like 18 years old. People don't realize that. So Roku was also a catch falling knife. Beyond Meat, immediate. That was a pretty good win. Amazon for a little bit worked.
The whole correction has been something, because look, Nick, all right, sometimes I have the chat room open, like, I'm a busy guy, right? But I still want to know what you're talking
Sunday
about.
Service.
I still want to hear what's going on there. So I remember that you were already calling this out, I think over a month ago, like this correction that it was due. We were going over the economic numbers. I know you're very, very in tune with the economic numbers that come out. Can you just take us a little bit back on really how you were able to spot that correction? I know everybody in the the chat room benefited, but just for the new people here.
I think so. I'm not sure I know the economic numbers. So when people were saying markets were falling because of taper fears, I said, I don't think so. If they were, the TLT would be moving the other way around. For example, the dollar would be moving the other way around. So they weren't fear from the taper. There was something else. And then somebody was saying, oh, it's the problem from China, the Evergrande problem from China. I was like, nope, that shouldn't be it. If that's the case, they're wrong. So buy the dip. So I said they're afraid, they're correcting just for the sake of fear. They don't know what they're afraid of. They're afraid of something. They wanted to pin it on something. So the media sometimes is at fault for creating this frenzy over because they want to create content. So they kind of like create a molehill out of nothing.
Like views. That's what CNBC, that's how they make a living on CNBC. Just
right,
views, right?
Right.
Catchy
Because
lines.
people would go, like when you go to commercial, let's say, hey, we have so and so coming up, and as they break into commercial, and you won't believe what they have to say. Then they come back and they say nothing. It's like, what do you mean? But that's their business. It's not like they're mean people. That's their business. So in this case, we had the wherewithal to say, you know what, let's form our own opinion. I looked into Evergrande, and it looked to me, and I did share my opinion, that it was bad business decisions all around, and it's focused and local. So whoever lent them money is in trouble. Whereas Lehman had systemic risk because what was going on in Lehman was going on everywhere else, which was bad assumption on top of bad assumption that was jumbled up into assets, so-called assets that were worthless, but they were sold all over the world. So it had systemic problems. This one was focused. So I said, if these are the only two things that are worried about, my bet is that Powell would deliver whatever we wanted in order to babysit the Wall Street. I said, they've been giving us a binky for so long. They're not going to take it away now. Yep. And then I've been saying what, Rodrigo, for the last month and a half, maybe 2 months, I said, this is the only chart I'm focused on every week. This is the weekly chart of the small caps. Don't spread the word. This is the secret potion here. Okay, so if you want to make a big win this year, watch this. So this is weeks. So that's months. Every candle is 1 week. One bad candle on my vacation candle, this one right there. Okay. It took us a long time to erase it, and then we fell back. But then we hit a floor. So now we're ping-ponging for months inside a very wide range. If we break from the range, it's going to be a rally to here. What? Yep. So we have another leg higher, like a maybe 10% rally in the market that's coming. If you hear that part, if we trigger. So far, no trigger, no trade. So I'm watching every week. This morning, my message to people in the chat room, watch the small caps and watch the VXX today. Watch the small caps. It needs to be here and here. Watch the VXX. It needs to be here and there. And then all day, and if somebody used that, they made a lot of money during the day. They went long, and there were people shorting in the chat room, and I said, please don't short. Please don't short. I wouldn't short. I said, I wouldn't short. I wouldn't short. I wouldn't short. And then the markets went crazy. So if we break out of 228, that's sign number one. If we break out of 230, I would be gutsy enough to take some money, put some money on the table. If we break into a new all-time high in the small caps, forget about it. All markets are going to rally like 10%. That's my opinion.
Yeah, good stuff. And I mean, today it's the small caps, but the markets change over time. And like, there were just some questions there about the renewal. Just want to let you guys know, the 50% off that you have today, you will keep that. That is a lifetime discount. So whenever renewal comes, you will keep that discount. And ultimately, you got to remember that education is a lifelong process, especially in this market. What's working right now might not work in 6 months when the Fed has a different attitude and when we get different policies and maybe we get another variant. Who knows? Everything's up in the air. So having a plan really helps. But I did want to welcome our newest member, Brumley 68. Welcome to the family. So you know how we do it here. We love all our members. We consider them a family, right? Everybody type in welcome Brumley in the chat. We got to welcome everybody here. So yeah, Nic literally does this dive. Everything that you're seeing Nic do right now, this is a normal day, right? All the welcomes coming in. Love that. Love the love here. We all help each other out. We're a big community. We're the largest community of educated options traders. Okay. And that's due to the hard work that Nic is putting in the chat room every single day. So you get the laptop, you get Benzinga Pro, you get the chat room with Nic, you get unusual options activity, which is a beauty of itself. And on top of that, we're giving you a complimentary laptop. It's not priced in. This is a gift. If you don't want it, I can keep it. But you know, it's a gift. So Nic, there's a lot of people here that definitely appreciate you. A lot of members that, you know, have progressed here throughout your education, right? And it's just really interesting to see, and I'm sure you've seen it as well, how some people develop and how they become better traders, and how, like, I'm pretty sure at this point you don't get these questions from me like, should I buy this call 40 strikes out of the money? So
I'm telling you, listen, the chat room is so diverse. It's weird how nice it is. There's not one jerk in there. How did we filter them out? Or maybe it's the spirit that's in there. Nobody wants to be a jerk. Everybody's being a nice person. So if somebody asks a question and I'm late answering because I'm doing something, preparing something, doing a video, doing a write-up, at least one other person will jump in and try to answer.
Yeah, Racer X. There's a lot of people that are very nice.
The Rez. I don't know if it's a
Rezkov. Yeah, he's from Europe. I remember him.
No,
yeah,
Rezkov. I think he's Australian that lives outside of Australia. But anyway, so super. They're all knowledgeable. They all have their fortes. Everybody has a system. If they don't, they're here to learn a system. And everybody asks basic questions. Everybody asks very complicated questions. So it's weird. It's like having a racetrack where you have mopeds and Ferraris racing at the same time. And it doesn't matter. Everybody gets along. So I'm very blessed to be in this room and very blessed to have this room, because every day I don't like, I have to jump in the room. It's open all the time. So my only complaint is that, and you guys are working on it.
Oh yeah, yes. We are actually putting out
the threading in there so that it's very easy for me to keep track and not miss anything. And the DMs, if it comes later, because if somebody wants to message me and I'm not logged in for some reason, then I can, help them out. Like here, somebody's asking something. I think I got that credit put spread tomorrow expiry. So somebody is not listening to my method. Stock did fall. So they're 149, 148. It's going to be fine tomorrow. But if it goes below, do you suggest to roll over? Hit me tomorrow, because we don't know what's going to happen. It may open up.
Guys, and I just want to touch on this point. We do have an entire, just so you know, everything you're looking at is proprietary Benzinga technology that we've developed, that all the hardworking coders out there, you know, Ross, Fox as well. Shout out to all the people that work hard day in, day out, because we are trying to help retail traders. We're trying to empower retail traders. We know that you got the short end of the stick, and that's why we're leveraging the playing field. Ultimately, you have to understand it's like a business, right? If there's no investment, really, how are you going to measure your return? If there's no investment, you can't measure ROI. As a business, you have to make certain investments that will help you become profitable. And if you don't, you'll go out of business tomorrow. It's that simple. Just like the business world is hard, so is the stock market, which is why you need to prepare, not only with the education that you have, I mean, Mr. Nic Chahine here, but also because you have the actual tools that are going to help you. Okay. So all of this is going to help you along your journey. Even if there are people that have been there for almost over a year, but the fact is the market changes every single day. So you need to be able to understand, number one, why it's changing and how you're going to adjust your portfolio, which is what we do mostly on Sundays, right? We digest the news, we adjust the portfolio as much as we need to, right? Because that is the life of a trader. You can't, if you just want to buy Apple and go to sleep, you know, that's a different thing. We are trying to build consistent trades here. It's not about making one big winner, one slam dunk, okay? Because you literally could give it all and more the next day if that's your strategy, trying to find lotto tickets. But if you're looking for consistent long-term account growth, this is it, right? You're looking for 20, 30, 40, 50% gainers, and you're definitely not trying to risk 100% of the trade like you want on just buying a call or buying a put. So understand the risk, right? And also know what you're doing. And if you don't know, you have a mentor, Nic, that is basically like a one-on-one in the chat, and all the improvements that we're rolling out. So everything you see in Benzinga Pro, we've built it and we're building on top of it. because that is our goal, right? We're not satisfied. We want retail to run the markets. We know it's hard because, of the actual money that big funds manage, but you at least are able to ride the waves. Retail is a blip in the radar. What you need to do is be able to follow the money. And I don't mean that dumb money. I mean follow big money, because that's what moves the markets. And we take advantage of that in the chat room. Right, Nick?
Yep. Okay. Somebody's asking details on something I posted earlier. So somebody asked me about two charts, and I shared them without a lot of explanation. So they were confused as to, my message was pretty cryptic. So I just told them, let's talk about it tomorrow, but explain in quick, short term what I meant. It was take two and open. One was looking to break out, one was looking to fall into support. So both, no trigger, one has a thesis, one has a trigger. So NT, both potentials tomorrow.
Okay. Do you want to do tickers, Nick? What do you want to do right now?
Hit me.
All right. Okay,
but be
chat.
civil about it, and using capitals will assure you won't get your ticker. No,
yes,
I'm just kidding.
Don't post the same ticker 100 times, okay?
Yeah.
So, all right, guys, give us your tickers. Nick is gonna do a
Okay,
live review.
Jumia.
Jumia, let's go.
Jumia. So this is the Amazon of Africa. Maybe it is, maybe it isn't. The top line is not moving. It's a German company, I think, for starters. So it is at a base. So if it holds the levels here, it's a good base. So if I'm building it for the long term, it's a decent entry point. This is a weekly chart that just declutters. If there's an earnings report coming, expect some turbulence from it. But as long as it holds this, you're fine. If it falls below 16.7, then you should worry. Like, they shouldn't have lost this one. That was a disappointment. I'll give them a pass, only a little bit. But lose that again, and that's serious. Pins. Pinterest is a buyable dip. PLTR, not a buyable entry point here. I've been long for a long time. So patience on PLTR. But if PLTR breaks above this, it could get to 36, close the gap. And this is a prior Reddit posse.
Okay. You have GDev after that one. You got GDev.
GDev?
Yeah, from Jacqueline.
Who's Jack? Oh my God. Okay, I have nothing to say.
Okay.
I don't think it was this one. It was Go EV, right? I've never seen GDev. That's probably this one.
Was it GDev, Jacqueline, or Go EV?
Okay, well, until she answers. Oh,
GDev.
GDev, yeah. There's not much you can say. I mean, you need to do homework on the stock. This is hideous price action. There's, it's just, you need to do homework. It looks like a SPAC. There's no income. There's nothing for me to tell you. If I go to a 15-minute chart, you need to do homework on the company. Sorry.
Okay.
AMD. So let's talk short term. It needs to hold this level. Seasonality says to buy AMD now and hold it through April. Seasonality. Now, I have to warn you that if the stock market's correct, I think you can get into AMD in the 60s. But that's miles. I mean, so many things have to go wrong for that to happen. Just for the simple reason that the whole thing is based on air. There's a big, giant nothing in here. There's a hole. So I don't like to build a huge, this whole rally is built on nothing. There's a giant gaping hole right there. So this won't happen without a market crash. It came so close. Look, head and shoulders here. It came so close to trigger, but then woo, we went to the moon. Clover, I'm long. It's a long-term long for me. Short-term, I think it's low enough into its base that I would be, if you twist my arm, I would definitely own it, sell puts to own it, own calls, but leaps out in time, which is what I have. Baba, you know what? I'm not about to fight Chinese government. So I love the business, but this is a falling machete that has a 2-inch handle and a giant 12-inch blade. So you're going to lose fingers. I did buy FXI. I had greens to catch the falling knife on Baba, but then I didn't book him. So now I'm in a red position and I'm stopped out. So I'm going to give you something that nobody's talking about. So the complaint with Baba is that it does too well. That's basically the complaint. So what if they minimize their 1111 event? What if, God forbid, they cancel it? That's $75 billion worth of sales in one day. I think the stock is in support, headlines aside. If you twist my arm, buy it or short it, I would buy it. But knowing that it could get a nasty headline still. So it's an incredibly strong company, just fighting the government.
It's the market.
I am long and very profitable in it. I caught the dip and I believe in it long term. Great business model. Now I sold calls against my longs this week at 18. So I thought that this is going to be resistance. So I own shares. I own calls at less, I forgot, 16, somewhere. I'll double check later. So I sold calls at 18. So I kind of capped my profits if it spikes tomorrow to 20. But I was brave enough that, hey, I already have a triple on my hand. I'm okay stopping out. So I like it for the long term. Know that it's going into resistance. So if it fades a little bit, that's when you enter, comes back here and takes that out, then it's going to go another couple of bucks. I'll add the alert right now.
All right. We got another one here from famous Jacqueline Fox. CEI. Okay, I'm familiar with Camber Energy. CEI, you know about it, Nick?
No, I do not. Holy crap. This is, okay, the easiest way I can say it, this is not an obvious point of entry. So if I have a lot of greens and I'm able to sell some covered calls, I could do that, but it's a $2 stock. So good job for being long. If you know why you should be long forever, then do it. Otherwise, this is where I would be exiting.
Okay, CHTR from Balaxy K. Good picks, guys.
Yeah, Charter is, I've traded it before. It's a $140 billion company, so it's no slouch. Very consistent P&L, so fundamentally. It's falling into a prior breakout line. It broke out here in August. It's normal to revisit it, but it's also normal to bounce and fade again. And if they do lose this candle, they are liable to come down to this zone, which was another breakout. So not a bad place to start thinking about it, but not a clear, okay, let's go. This candle was too big on earnings, so they have earnings coming. This would be where I would sell puts or put spreads to buy instead of buying shares. Like this level here, super exciting. So imagine if you can buy it at 670. That would be great, right? So CHTR. We're circling around to what we started out with. Well, how can we do puts? Check it out. What was the number? Let's go to 580. Wouldn't I love to own it at 580? So let's go to 600 here. Somebody will pay me $400. I don't know. These numbers are pretty wacky. So let's go to 605. Somebody will pay me $600 to promise to buy it at 605 today. If I can buy 100 shares, they'll pay me $600 today to take it off their hands. And this will be the place where I would buy it. This was the base for the whole rally. That's where it's slam dunk decision. And
let him come to you.
Yeah, and if I don't have enough margin power or I don't want to own shares, I would sell a put spread anywhere in here to create income out of nothing.
Okay. Now let's go to the YouTube chat because these guys are a little lonely there. We have Nicholas with Disney. Let's go with
Disney. I
Mickey
can't
Mouse.
believe it just dropped. I don't know what happened, but it fell into a neckline that has served as a base for a while. But this is a situation where AMD had. This is almost identical to the AMD setup before it rallied that last time. And I said, you know what? I can buy the dip, but markets have to hold up and it has to stay above this. Because if they lose this one, they could provoke panic to fail this one, not even have a chance at holding here. This is another place where it can hold. But I think if they lose this one, they might create a panic and they might get to this weird stent. So all by itself, I don't mind it at all, as long as I'm diligent enough to stop out. That was on the dip yesterday, I believe, right?
Okay.
Or 2 days ago.
All right, let's go to It's in My DNA. Her ticker, well, her, not sure. Ticker symbol is MO.
Oh, smoking. I don't know if they still do smoking. So when I see gaps like these, they're not easy to fill. especially when there's this failure and this failure. So I feel like this is more the balance area. This is where I either own the shares for the dividend if they still pay a dividend, like Exxon. Holy crap! Yeah, definitely a good dividend play. So if somebody needs fixed income, you can't get it anywhere. So this is where, that's why these stocks are bid. Exxon, Chevron, this one, they're dying businesses in theory. People shouldn't be smoking, people shouldn't be using fossil fuels, yet there they are. So by default, there's going to be bids for them because people on fixed income, they can't be risking money everywhere.
Okay.
So that's a good balance. I would own shares. I would not buy calls. I would sell put spreads for income, but owning shares are probably more fruitful.
Okay. All right. Let's go to John Larson's ticker here, IBM. It's an old timer.
One of my least favorite tech companies just because of management. And I am an IBM guy because I'm a PC guy and I'm an engineer at the time. 286, 386, 486. It was all about IBM. 8088. If you want to go back, we can. Burroughs. So, all right, not ideal price action. I can't believe, I can't get excited over it going into 140. There are sellers lurking all the way through 143. Right here, 140, 143, there are sellers lurking. So here's the danger. If IBM loses 132 and a half-ish, they might trigger a bear to get to like 125 with support at 130. So be aware of that. Then you would avoid some pain. Let me see. This is an old box. Weekly sandbox. They lost it. Pivot zone. That's where they're at. Look, that pivot zone is still here from a long time. When did I draw this line? Whoa, long time.
Okay. Let's go to one of your favorite tickers. Here's from Gino, Penn Gaming. We all love this one.
Yeah, Penn was showing so much promise and then fizzled. So that's where the alert lies. See, so I thought that it would break out. If not, it would fade. I did this yellow thing and then come back to breakout. Hopefully that's what it's doing. But primary job is to hold this bottom here. There's no need to lose this base. In fact, there's no need to lose the weak, the lows from the last couple of days. They're going to face sellers, but if they come out of here, that's somewhat of a complex invert head and shoulders, or just a regular invert or cup and handle, whatever you want to call it. Anytime a chart, a stock comes back and breaks through a prior failing zone, a very sharp prior failing zone, the bears capitulate and the bulls will bum rush them. And vice versa works out the same thing. That's why the head and shoulders are scary. Cup and handle is not scary. So in this case, they're coming into a prior failure. If they bust above it, they overshoot.
Okay. All right. We have Chris asking for Peloton.
Okay, Peloton. 3 people asked me about today. I said, be aware that it could be already in breakdown. So they need to recover 96 pretty quickly, 100 preferably. They will find sellers into 107. So somebody asked me, what are the lines on the chart? Sorry, I didn't answer you yet. So these lines are just a visual representation of the reversion to the mean. So they don't mean a lot. This blue, red is just a visual representation. The only study I use here on this chart is this one here. So in this case, it tells me that it's going to be a slog getting back up to 110. It's not going to be easy. This orange line tells me that this is where traders love to trade it the most. That is volume that happened at this price level. This is volume that happened in time. The same information is represented here to tell me where, at what level this happened. So this spike, this tells me that this is where they love it the most. So as it rallies, there's going to be more sellers and buyers. It's just congestion. Ooh, hits the brakes.
Okay. All right. So let's go here back to the YouTube chat so these guys don't get too lonely. Anthony, my biggest holding long term. All right. Anthony's looking for Chewy, CHWI.
So I closed my long today for even money. I applied discipline. So the bet expires tomorrow, and I came back to an even situation with no edge. Like, I did not know why it was going to stay above 73.50 tomorrow. And that was my bet. So I said, you know what? I'm taking my money and I'm taking my ball and I'm going home. So I said, I'll play with you later, Chewy. I love the company. I did buy the dip. I will buy the dip again. So if they lose this line here, they may create a short bear to take it to 65. Technically, it should take it to 60, but there's going to be a lot of support. So I would buy the dip at every big drop. The business is super healthy. The negative reaction to the earnings was absolutely, I'm not going to say the word, ridiculous. They're growing like gangbuster again. They, quote, missed expectations. Who gives a flippant fart about what the expectations are if they're growing year over year? Isn't that the point? To make more money and more money and more money, whether the analyst got it right or wrong, it doesn't matter.
Right. Okay, so just want to do a quick shout out here to the new member, Steve Adler.
You killed me with that
Wow.
thing.
It's just they love you, Nick. All right, so let's get back here to the how do we call this? Fast fire ticker review, right? Is that a good name?
Fast fire, yeah. I think
Fast
that's
fire?
Kramer's word. I don't want to use that.
Oh, well then let's not use that then.
Maybe it isn't. Let's go with fast fire. Yeah, go.
Okay. All right. We got Uber from Jeff the Man.
Okay, so Uber, as soon as I bought shares out of the gate, people made fun of me because they fell apart, and then I sold $16 puts in them to high. I mean, I made pretty good money on it. So here, it's not an obvious point of entry. Going into 48, I think there are technical sellers. Going into 52.5, there are technical sellers. Over the long term, if I forgot his name, Dara Khosrowshahi or something like that, still has the same plan. I like it, but I'm no longer clear on it. So let me give you a quick visual here. Okay, this is the weekly chart to declutter and give you a clear picture. It started here, topped out. It took it years to get back and break above. Why the hell do you let it go so quickly? And now it becomes a fight again. So this is potential resistance zone. Onus is on the bulls to overcome it and show me that they can do that. So if I wanted to bet money on Uber, I would sell puts down here for income.
Okay. And a quick question there, Jim Cruz, is there any way you can hold on? Yes, if you want this deal, well, I mean, it ends at midnight, but I'm not a bad guy, so just call me and we'll work something out. But okay, let's go through some other tickers here. Fubo, you're familiar with Fubo?
I am. I'm familiar with.
Look
Fubo.
at all those notes that Nick already has.
Yeah. That's why I need to zoom in sometimes
because these are your tickers, guys. These are your tickers, and Nick is already in them, out of them. Like he knows them. Like you know what?
So Fubo is basically, if you don't know what it is, it's an aggregator of streaming content like Google, YouTube. TV. I subscribe to YouTube TV. It's exactly the same price as Fubo. If it wasn't, I'd be buying Fubo. So the one good thing about Fubo is the plan. The demand is there, so the addressable market is there. They're not reinventing the wheel. The problem is, why is it doing so badly when it has so much promise? The P&L is still too new. Maybe Wall Street needs to get. I mean, you can't take it seriously. First time I heard about it, it's like, oh, geez, another SPAC. But technically speaking, you cannot lose this line. You lose 25, you're going to create a drop to like 21 or 22. So then you buy the dip down there. So if you bought the dip here, you stop yourself if it's a trade. If it's not a trade and you want to buy shares for the super long term, you don't buy full bore. You buy half or less than half so that you don't have to average down. You just get into the full position on the drop down. You hear that part? Difference between averaging down and getting into a full position in tranches. There's going to be a lot of sellers at 28, even more so at 30 and above.
Okay, all right. So, and we also got a very good name for what we're doing: Rapid Fire.
Rapid Fire. Okay,
I love it. Caroline, and she wants Amazon, so definitely got to hook her up. Let's go over Amazon.
So one more thing about this one because it ties into Amazon. So and low, high, somewhere in the middle lies the truth, and they're fighting for it. So nobody has an edge. It can do this, it can do that. When I don't have an edge, why should I buy it here? I better have a thesis because X, Y, and Z. And because it's going to go up is not a thesis. It's going to go up because this and that and the other, then that's a thesis. Okay, back to Amazon.
By the way, guys, don't forget, shout out to Steve. Okay, give him a warm welcome here. Let me see some chat comments. Welcome, Steve, right? Welcome him to the family because that's what we are here. Okay, we're a family of options traders. We help each other out. We're going hard for you, literally doing this. And you haven't even gone to the Sunday sessions with Nick. So let me see some welcomes there. Love it, Jacqueline. Love it, Chris. Keep the love coming. Remember, we're all here to learn and make money. All right, this is a safe place for you to learn and really understand these concepts. But let's get back to the rapid fire.
Okay, so this is the same situation. Too high, Amazon. Too low, somewhere in the middle lies the truth, and they're fighting over it. So I did share a trade on Amazon recently, and I said, I'm not inclined to buy calls or call spread, but I'm definitely want to bet on the downside scenario not coming to fruition, especially given my thesis on the Fed. So the credit put spread worked out, the debit call spread, maybe they did, maybe they didn't, but I don't care. This is not an obvious entry point from a trade perspective, but this is a company that is net income went 10 times in like 4 years. It's just astonishing what it can do. It's just, don't ever bet on Amazon against Amazon. And as far as what to do with it, zoom out. On a yearly basis, Amazon loses like 30% of its value. So don't chase it into highs and don't capitulate out of it when everybody else hates it. When CNBC, the biggest win in Amazon I had when it was like $1,600, and I remember that was the last time I watched CNBC. Haven't watched it in a year. Steve Grasso, I think, was saying, you can't touch it. The CEO himself told you this is a spending year. I was like, dude, this is when you touch it, because when he spends money, he makes money on the other end. So he created the cloud out of it. So you can't touch it, and then it tripled. Yeah. So yes, you can definitely touch it when people are afraid of it. So anytime it's at 3 or below, look at it. And if it by any crazy, if it comes down to here, I will remortgage my house, my cars, the dog, my kid, and get long, however long I get.
So Nic will give you guys these, and he's got thousands of alerts that he's going to give you. But I see just a quick question here from D. Clark and Khaled. What is the deal? Okay, well, let me just go over this one more time, guys. So it's going to be, it includes Benzinga Pro, which is the best research tool out there. It's meant for retail traders because that's who we familiarize ourselves with the retail trader. I'm a retail trader. Everyone here is as well. So you'll have Benzinga Pro with all the tools, the chat room with Nic Chahine, unusual options activity. You get the scanners, you get the newsfeed, you get every single tool that we've been working so hard to give you out. But most importantly, it's the options education, right? Because that's how you're not only going to pay for the subscription, but pay for everything else. So you also get a complimentary laptop. It's not included. It's not priced in. This is literally a gift. Okay. We're giving you a complimentary laptop, but this deal expires at midnight. So let's just get, and if you have questions, my information's all over the chat. But let's get back here to the tickers here. What are we saying here?
So wait, one more thing. You remember I talked about the IWM super spike?
Yeah.
Okay. So Amazon triggered one here, and then it fizzled with the market, but it didn't lose the setup. It still has a weekly consolidation. This is months. This is Amazon. Super rally, months of consolidation, building a strong base. If they can get above this one, step one. If they can get above that one, whoo-wee, $4,400, $4,600. Guaranteed. No, not guaranteed, but likely. Same as the IWM. Okay, go.
Oh, just want to mention here, guys, the laptop is only for the annual. So you have to get the annual one if you do want the laptop. But you do save somewhere like $1,000 if you do the annual. So I definitely go that route. Yeah, let's get back here. Shopify. Okay, you already beat me to it. What's up here, Nic?
That's it. Notes on the chart. It has mini support, bigger support below, but it's freaking better hold. You have a pivot zone, which is usually resistance as it rallies into it. So advice from me, I don't trade this because the single leg options, if I buy a call or sell a put, if I want to buy a call, it's too expensive. And if I buy a call spread, I never get a good quote and I never get a good fill. So I said, you know what, screw it. This one, Lulu, Spotify, I avoid them because I don't get clean. There's another one, Alta, good tech companies, great tickers to trade. It's just the options are just terrible. So be careful what you do there.
Okay. And just so you know, guys, I just posted the information for the deal with the checkout and my number, my email, so that we can chat, we can talk. Sushila, I know you got questions. I got answers. Okay. So let's do this.
Somebody was crying earlier, not crying. Somebody was yelling and screaming. They want Zillow. So this is Zillow Group, same ticker. It's in a base. This is not an exit point, although there are sellers into 100. So the mental block is around 100, but you have a base around 90. Don't lose your base. It could fall lower, but it's already in the base. So if I'm not 100% invested, if I am invested, I will add to my full position just above 70. But the bears are in control of it. You have to admit it. So first step is to hold 90. If you don't hold 90, don't even try to cash this falling knife. It's Alibaba.
Okay. Now this other one there, this is okay. All right, guys. Just so you see this, right? 6 months ago, this was me talking to Nic. The only difference is that this time I actually made a calculated risk on this trade. So listen to my trade and how Nic responds. And this is basically going to be your Sunday session. And this is a real trade I made. All right. So I'm doing my trade of the day with you guys. All right, Nic. So Affirm. Okay. AFRM. I went in there when it was $116. I got weekly calls for October, I think 10 or 20, something like that. It's up pretty nicely, triple digits. What should I do? I mean, this became a meme stock. Suddenly I'm up 130%. What do you recommend in these cases when these things happen, when you just get a winner, a big one?
So we went long Affirm like eons ago.
Oh, you're beating me by a lot then.
Yeah. So because it was falling, I was like, what are you selling? It's a beautiful business model. It's a fintech. They touch the consumer. So we're talking fundamentals. They touch the consumer. They have deals on the back ends with retailers. It's like, holy crap. It's a bank. It's not a bank. It's beautiful. It's a transactor.
Amazon,
it's and then Amazon deal comes up, and then the earnings reaction comes out. Up here, it's not an obvious point of entry. I would book it. How do I book it? It differs. If I bought shares, I would just sell some. If I wanted to keep some for the long term, that's fine. For me, I would just walk away and say thank you. And whenever they hate it again, and they will hate it again at some point, I will go in and step in and buy it. Buy the dip again. If I own it and I want to keep it, I can sell covered calls. So I'll touch on that one really quickly, but I'm not going to debate it. I'm not going to take questions about it. I'm just going to give you the idea. So if it's he holds shares or calls at a certain level, and what they can do, the person that owns the shares or the calls, they can sell calls against them. So if I own shares, that's the easier one to explain. And I think, you know what, I want to book $1,000 on my 100 shares. I would, sell this one right here. And what does that mean? It means I promised Bob out there, hey Bob, I'll sell you my shares at 170 in the next 120 days. He'll say, cool, let me give you $1,000 for it. So he seems like a sucker because he's paying me $1,000 to buy my shares up here. So the worst case scenario for me is I keep my $1,000 and then I have to sell my shares up here to Bob this year. What if Bob doesn't ask for them? Then I keep my $1,000 and my shares. So that's selling a covered call. Why people don't do this for every stock they own boggles my mind. Synthetic dividends is what I call them. You create your own dividend. You can do that with any stock. All right. So somebody is asking for something else. Let's go.
Hood.
I like Hood. I bought the dip, made money. Period. End the story. Right now, it's going into a prior failing point, an accident scene. So it might find some sellers. So if I'm not long yet, and I want to get back on the bandwagon, I have to acknowledge that I missed out on a little bit, but I also wouldn't do it until it beats today's high, at least, because then I'm okay. Then I know that the buyers are still in control. But look, I already have resistance zone. I expected it to do this bump earlier. It took its time to start to develop. So I'm going to take it out, to be honest.
Yeah, they put out, well, I saw this on my Benzinga Pro. I actually saw they came out with like this. They're testing a crypto wallet. So it's like kind of news oriented.
But I went long because when it fell on the news that the SEC is out to get them.
Yeah.
They said they're going to take away the ability to sell orders. So then I talked to somebody that is a frequent guest on anyway, I talked to a couple people that know Wall Street. I don't know Wall Street. They said they can't do that because if they do that, they're going to create a chain of event that is hard to foresee what kind of other ripples it's going to cause. So it was more like the SEC barking at them saying, we're watching you, get your act together. And this was a threat to 80% of its revenue. I bet that they couldn't do it. And I said, I'm going long hood, and it paid out. So how did I go long hood? Let's address, I said, I like to sell more than buy. I was so confident that I sold and bought. What? I went to, I think it was December, hood. Yep, I went to December and I sold a put spread below and I bought a call spread above, or calls. I can't remember if it's Nic calls or call spread. So I'm saying I'm long with other people's money. So yes, I paid something to be long, but I also collected something to be long, saying that not only I'm bullish on the upside, I'm confident of the downside scenario not going to happen. So this is where you really get long something with very little out of money, out of pocket money.
All right, let's jump onto Dropbox, DBX by Usury.
Okay, so I'm amazed that they're in business. So I use them, but I will never pay them a penny. So if they say you have to pay for your service, I'll say thanks, it's been fun, I'm out. Technically speaking, you can see a sharp floor at 30, which means don't lose it, because then it becomes a trigger. It has a last minute effort at 29.40 to hold up, maybe through 29. But if that fails, I think you can get to buy it at 27.50 to 28. The positive spin is the bulls are in control and they're making progress against prior failing points. This is where I need to delve into lower time frames in order to see where the resistances lie. Like I can see sellers lurking at 31.70, more sellers around 32, and see that orange line? That's an automatic draw. That tells me this is where they've been most active. Look, the volume peak is highest. That line right there. This is what they call, I think, overhead supply. So when it gets there, people are interested. Buy, sell, buy, sell, buy, sell, buy, sell. It's like hitting the brakes. Slows down.
Okay. All right. So we've gone over like 1 million tickers here, guys. Nic Chahine does this every day. By the time you're sleeping, he's already scanned the market 10 times back and forth. And this is something that you see literally every day in the chat, right? So this is something that you also get on the Sunday sessions where Nic is going over tickers, he's going over strategies, any feedback questions, and ultimately adjusting our trades based on the news. A lot of people are not very familiar with how the market works in general. They just think it's all just buying and selling, but there are different participants in the market and they all impact different sectors in a different way. And really not getting that puts you at a disadvantage, which is on top, that is basically what you call just trading education. But ultimately, all these numbers, it's really hard to get them all. You can get them inside Pro, but Nic does all the homework for you. He does all the scanning, all the research. As a mathematician, I trust his numbers. He's had several contrarian trades and he's been on the right side. And, that ultimately makes more sense to me than just buying whatever I see on CNBC, right? I don't like to get on the kiss of death. I really like when you get there before the crowd gets there, right? It's being ahead of the curve. It's having edge. In Wall Street, that's what they call it, right? You need to have edge. What is your edge? Nic Chahine and Benzinga Pro, right? The access to Nic.
But it's not so much me. I mean, I help a lot, but it's the collaboration. So if I have, like, the other day, somebody asked me, I think it was Neil, he said, what's the last word? I said, don't ever trade alone.
Never,
because you become more accountable to yourself. If you're sharing ideas with other people, you'd be less loosey-goosey with them. You'd be like, holy crap, I need to share that. I better do it right. Let me double count. Let me double measure. Like if I'm doing a project at home, I take the saw, like I'm going to cut it. No, you know what? I better measure it again to make sure. And sure enough, every once in a while you find a mistake. Often you don't, but that once in a while. So if you don't trade alone and you share ideas, you don't have to be very specific and like disclose everything. But if you say, hey, what do you think? I'm looking to do this. What do you think? As opposed to coming to me, I did this and now I'm in trouble. Just come to me. How do you defend the trade? You set it up right. That's the first defense. Is a great offense. Set it up right. Then you'd be less likely to need to defend it unless something exigent happens. So, boy, that's a big word.
Yes.
So
don't wait until you're down 80K, 150K, 250K to call me and ask. Like I'll give you the deal, but like it's really,
So-
this is meant for you to get in before you start jumping into the market.
For
with that
example,
kind of money.
somebody just posted, Rao said, TSM, please. So nice about it, said, please. So I said, okay, here's TSM. And I upgraded my lines. I just moved them around. You see me? I didn't retype much. I just moved one here and here. And this was support or resistance. I renamed it pivot because that's the point of this chart. Right now, it's in the middle of the range. I don't have an edge whether it's going up or down. In fact, I think it's a little bit heavy. There's a lot of resistance above. So what's the catalyst that's going to get it to the next step? Maybe the fact that it's hit a floor, and if the markets rally, it's going to follow the markets. So then I have to be realistic with my expectations. But if Rao just goes ahead and buys it or sets a trade and tomorrow it gets in trouble and comes to me, or next week and say, hey, I'm in trouble with this trade, it would have been better if he came to me and so I can set the expectations. So he's not all in, because there's no indication to be all in. There's a hint here and a hint there. But unlike open, the opportunity with open is clear. It's clear as day. If this happens, that's going to happen. So it's right there. It's itching to go. Right. So then I can say, you know what? You can buy this and do that if it doesn't happen. Versus the other one, maybe this happens, maybe that happens.
Okay. All right. So we've been here for quite some time with you guys, like literally more than 2 hours. So Nic, what do you think we should do here? I know you're you're in the chat room, and you definitely, people are waiting for you there. So what do you think we should do? Should we just end the session here and I can just stay doing Q&As, or what do we do here? Give us throw us a bone, guys. What do we do, Nic?
You're the pros. I'm here. I mean, I can do tickers all day, but I think let's answer something about options, because we kind of like left, I think, a few people dangling.
Yeah, let's
So
cover. We
give
want
me
to make sure
a
we
couple
cover
of
this.
questions about. Show me what do you want to go back over on the option side? We go full
Questions about
circle.
options. Questions about options. No more tickers. No more
Yeah,
tickers.
no more tickers. We can do tickers all day. Join and we'll do tickers all day. Greeks.
Oh my-
Okay. So
Okay.
I can tell you one thing. I don't speak Greek. So I do sell naked puts. That's my favorite thing to do, Sushila, selling naked puts. But I will tell you what the Greeks mean. And I'll tell you why you don't really need to know them as well as you think you do, because it's plain, simple logic. I don't want to dissuade you from actually studying the craft. The more you know about it, the better. But people get bogged down and they almost get crippled by them, which also makes them trust them a lot. And it's very simple. If I sell a covered call and do not want to get it signed, what do you do? So Afzal, is the first thing you do when you sell a call that's covered is make sure you set it at a place where you can honor it, meaning it's not a problem. It's a no-lose situation, that you can actually sell the shares at that price and keep the profits from the sold call and from the shares. That's step one. So offense have to be set properly. To answer your question, you can roll it up or roll it up and out. And if you probably know what that means, meaning you close it where it is and reopen it somewhere else. If you send it to your tax person, they'll tell you, okay, so you lost on one trade and you opened it somewhere else and you made money on it somewhere else. So it's two separate trades. Rolling really is closing a loser and opening it somewhere else to make it up. Not my favorite thing to do. Okay, so wait, Greeks. So what is the Greeks they'd be speaking about? So Wall Street loves to make us sound like idiots. So instead of using English words, they chose to use Greeks. So for example, theta, the theta burn, or whatever they call it. Theta is time. That's it. So you know that if I buy a contract and insurance on my car for a year, it's going to cost more than for a month. So the longer theta, the more time I have, then I have to pay more. And every day that goes by, that policy is worth less because it covers fewer and fewer days. So the theta burn is just time ticking. So earlier I said, what do I need to win when I sell a put or a put spread? I need nothing to happen. I just want time to tick and nothing to happen. So that's the theta one. So don't need to know much about it, except that time is of the essence when I buy a call or a put. I need something to happen quickly. When I buy shares, I don't need it to happen quickly. I need something to happen, but not quickly, because there's no time. So what's the other one that's important? I already mentioned it. Can somebody guess? What's the most important Greek to me? Delta. Chris is listening. Chris, Delta, Ken, good job. The odds. That's the only way I know I have an edge against my competition. It's like you go into a fight knowing that you've got a stick behind your back. That's the only way you guaranteed yourself a win, is when you give yourself an advantage. It's not cheating, it's picking right. So if I'm buying with a high delta, a 50 delta, by the way, if somebody says you have a 50% chance of winning, wow. No, that's not wow. That's a coin flip. That's Vegas. That's not investing. I want 80%, 85% chance of winning. Now that's edge. Now I literally have the odds against my competition. And it is a competition. When I'm buying something, when I'm selling something, there's somebody doing the opposite on the other. There is an other side of the trade. They don't come off the shelf. I'm not buying it off the shelf. I'm buying it from somebody who thinks I'm an idiot for doing what I'm doing. Whoops, I almost spilled my soda again. So the idea of the delta is very important. So if I'm selling a put, I don't want to sell it here. I have no edge. It's a 50-50, 0.5. 50% chance I win, 50% chance I lose. I'm a horrible guesser. I would like to give myself edge and go even below that. I want 0.15, which means about 85%. I'm rounding, about 85% chance of success. So then I have an edge. The person that buys it from me is buying a lottery ticket with very low odds. So that's the delta. So now we talked about theta and we talked about delta. Now you can go talk about vega and gamma. There are people in the chat room that go in there and they're throwing, oh, the gamma squeeze, and it's like, you lost me at gamma, I stopped listening. It's not a place to discuss it. If you think you know how to play a gamma squeeze, by all means, go dig. There are plenty of write-ups about it, very fancy. You can read pages and pages, and you feel like a genius listening to it, and you go to put it to practice and go, okay. Dumb it down as much as you can. You see a great stock falling into support, you sell a put or a put spread, easy money all day, every day, all year. That's the easiest way to make money on Wall Street.
Love it. Consistency. I mean, guys, just know that we're not here for lotto tickets. I know that there's a lot of, there's a lot of YouTubers, Twitter accounts, a lot of pumpers out there.
We did make thousands in lotto tickets 2 weeks ago. On zero on Friday, I think. It was Wednesday, and then
the falling
Friday.
Knives. Yeah, the falling knives.
No. It was like, I bet the SPX is going to close big or down big. So I'm going to buy a 50-cent put or a 50-cent call. That either works out or it doesn't work out. And that 50 cent turned into like $5, which means $50 turns into $500. So,
yeah, and that's great, but
that's not the goal. I share those every once in a while. Sometimes they don't work out.
That's measured risk.
Yeah,
right?
This is literally a lottery ticket, meaning I spend pennies to try to make bucks.
Yes, do not go all in on these falling knives, guys.
No, I want an amount that doesn't break my piggy bank. Maybe
what percentage of what would be a good percentage of somebody's account here?
It doesn't even register as a percentage. It's just a trade I do. I literally spend just a few dollars to make hundreds, maybe a couple thousand. That's it. It's not a method of operation. It's sometimes fun when I feel something coming on and there's a possibility that we're going to, like, for example, today I said there is a potential to bull put spread, credit put spread. Yes, I love those. To close the gap at 446 or 447 in the SPY. Okay. So if somebody wants to make that bet at the close today, I said, wait for the VSX to get to this level. And then if you want to speculate, I'm using these words on purpose, speculate, bet, gamble, lotto, to tell them that if you want to spend a small amount of money for a long shot, low odds trade based on this thesis, it's available, that maybe we close tomorrow the gap that we fell off a cliff earlier in the Monday, was it? Maybe we do that. Not a lot of people are expecting that. So I saw a couple of things that may have hinted towards it, but I have very low conviction in it. So I said, lottery ticket. I didn't even get the chance to do it myself because I was busy talking to somebody else. So that's the kind of lottery tickets that every once in a while I share, but that is by no means a trade setup that I share across the board. It's just something that happens in the chat room for fun every once in a while.
Yeah, the majority of what I do with Nick is credit put spreads, and then here and there, a call here and there, right? Because you need to understand the risk with the difference of the risk between a credit put spread and a call, and understand that your position sizing has to be different because both of those trades will not. They're structured differently. So whenever we're talking about like, it's different to do lotto tickets every day, all day. It's different if you're taking calculated risk, right? So that you can get a little bit ahead on your portfolio, because with credit put spreads, we're mostly looking for consistent gains. And I had this one guy, you remember this guy, Nick, Joeli. You remember him?
Vaguely, yeah.
Yeah, from the chat room. He literally had to call his brokerage because he couldn't believe he made so much money with you. But this is, and he was an older gentleman, but ultimately, if you guys are like young and new to trading, I really encourage you to take this deal, because the education that you're going to get with Nick, number one, I can speak for it. I actually have gotten the education from Nick, and my trading has improved. But if you are at that point where you're new in options and maybe what you're doing isn't working or isn't consistent, it's time that you actually hook up with a mentor, right? Somebody that knows what they're doing, has been doing it for a living for over 2 decades, is someone that's not trying to sell you on 10 baggers, okay? And we're pretty honest about this stuff, guys, because we care about you on the long term. So please know here that Nick has been here, so kind to be with us for a very long time. And Nick, give us some closing remarks here. Tell us what's in your head. I know a lot of people you already know, members here, but give us some closing remarks on your end and on the market, what to expect, and what you're going to be doing in the chat room.
Okay, so first of all, keep an eye on this. What the hell is that? Apple out of the blue. So maybe they hunt it down tomorrow. Keep an eye on it. Second, somebody's asking, how long do I hold a credit put spread or bull put spread until it makes me money or until the setup breaks? I book it early. I don't try to squeeze it all the way. In fact, there are studies that say if you close them X% of the way, then you're going to win much better at a much higher percentage. As far as if I leave you in one piece of like high level thought that could probably save you a lot of grief, if you're watching CNBC, first of all, don't. But anyway, if you do, don't be chasing the unusual options activity. It is so hard to make money with it if you're picking it up from the Nigerian brothers on TV. The only way to actually make money off of unusual options is to do your homework yourself. And by the way, Benzinga Pro does offer you that opportunity to find them yourself early enough before they hit the ticker. Because if they hit the media, especially TV, you're the person that's actually buying somebody else's profits, and John Nigerian is probably exiting when you're entering, or closer to his exit when you're entering. So it's not like that he's nefarious about it, but that's how it works out. He finds it early, he jumps on it. By the time his segment comes on, by the time they go through all the commercials and then he offers it, everybody's on board. So, and besides, think about this when they say most options expire worthless. Isn't that by definition the unusual options activity where you see like a billion options? That's most. That's where they're going to lose unless you're early enough and you ride it up to where everybody's on board, and then you'll be booking profits. So don't chase it blindly. Open interest is important. Those are the positions that were here yesterday from yesterday's activity. So this morning, volume was all zeros, and then the day went on and these changed. This doesn't change. It'll change tomorrow based on what happened today. So tomorrow, these will be different based on what happened today, and all of these will be zeros. Like nothing happened in this one today. All of these will be zeros, and they start ticking throughout the day. Tick, 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 tick. And then Monday, these will change based on what happened tomorrow. So study the open interest if you know how. If you don't know how, join the group. I study the open interest for us. That's how I come up with the iron condors. I don't do them willy-nilly. Before the correction happened, 2 Fridays ago, so last Monday was a correction, right? Friday, before this Monday where we fell, I said, boy, I see a lot of downside pressure in Apple and the S&P and the QQQ. I mean, like a lot. I said, the market makers need a whoosh down to fix those. So we wake up Monday and the world is falling apart. So anyway, that's my spiel. I mean, if you're not convinced that you would benefit from the chat room, Benzinga, hey, are you guys offering the money back guarantee thing?
Yes, we do.
Okay.
We're offering for this one, we are doing a 7-day money back guarantee.
So pop in for 7 days. If you don't feel a benefit that you think will benefit you for an extended period of time, whatever the charge is right now, I'm looking at a number on screen. Think about it. Is this a yearly number?
This is, yeah, that is for the year with the complimentary laptop. That's right, Nick.
What? Okay, so would you pay for a class of options that much that lasts a year? If you don't, then you're not serious about investing. It's not an insult, it's a statement of fact. I would have paid way more than this to learn, because I know the hard work it took me to learn this crap. So, and I'm not pitching this. I didn't even know what they were offering. So, but Benzinga is Benzinga. They know what they're doing. I got to bolt out of here. I've been sitting in my freaking chair since 4 a.m. So,
all right. Don't leave, guys, because we're gonna do a quick Q&A
soaked
here.
in soda. I need to leave. No.
Okay. All right. Well, we love you, Nick. The members love you here, and you got a lot of people in the chat room that want you to hop in back there. So, I know you're busy with that all day.
I gotta walk my dog too. He's probably cussing me out.
Okay. Nick always has his phone with the chat open, so even if he's walking the dog, he'll always throw in a quick chat there. So everybody say thank you, Nick. All right. I want to
thank you, guys. Thanks for the opportunity. Hopefully, if you're a jerk, don't join, because the chat room is awesome. But so far, so good. It's I think you're going to be pleasantly surprised. And hey, you can change your mind in a week.
Okay, sounds good. Sounds good.
So if I exit out of here, I'm going to stop sharing and leave the room. It's not going to mess you up, right?
You got you're good.
Okay,
you're good.
All right.
Yeah.
Signing off. Later, guys and gals.
All right, guys. So if you are here at this point, congratulations for making it this far. I just want to thank you for being serious about your options trading. As I was telling you before, I am an options trader. That's literally the only thing I trade. And I learned a lot from Nick, from his options trading, because I was just doing the basic calls and puts. And, it's like going to a gunfight with a butter knife. If all you know how to do is buy calls, that's a problem, and we definitely want you guys to be successful. We definitely want you to join part of the family. Take your trading career seriously, right? It's not a hobby. You heard Nick. Everybody who's serious about this, who makes money with it, will tell you the same thing, right? You need to treat it like a business. You need to make certain investments, but we're giving you all the tools. We're giving you we're giving you all the stuff inside there. We're giving you the education with Nic Chahine. You heard him, fast, rapid fire ticker style there. But even if some of you guys work 9 to 5, don't worry, because we meet on the weekends and we go over these, like literally we go over this. This is like a little sneak peek of what we do in the chat room, right? In the chat room. And then we take it up 10,000 levels up once we meet on Sundays. Sundays is really where we scout the market. We adjust our trades. As you know, the news comes out. News will not wait, my friend, for Monday to come. All right. News comes out when it comes out. If you see it, how do you trade it? If you don't see it, you're even in a worse position there. So trading in a community is the best thing that has happened to me, because if you fall into vacuum trading, that's what I call it. If you're vacuum trading, you're literally like just doing wild west stuff, right? You're not filtering your trades through somebody that really can add value to what you already have. So even if you're good at what you're doing right now, but you're not consistent enough, that's what Nick is going to help you with, right? We need to close like any loose ends with the strategy. So as you guys know, this is for retail traders, right? You got Bloomberg, which is for hedge funds, equity firms, all that stuff. Benzinga is for retail traders. And that's why we're giving you all the tools here, right? Even if you work 9 to 5, you can still just go to the meetings on Sunday, adjust your trades, like literally adjust your mind, because as the news comes out, you have to basically remember that different sectors will be impacted in a different way. So this deal is available until midnight. If you do want the deal, you can do two things. You can click on the link that I posted on the Zoom call, or you can email that email at the bottom, rodrigo.serta@benzinga.com, or you can call that number below. That's my direct line. If you want to talk to me, we can, I mean, right now I do got some people to get back to, but if you want to reach me at any point, anytime during the day, you can email me, you can call me. I'll do my best to give you the deal, even though management might, I might get in trouble with them, but I'll still do my best to hook you up. All of this includes the complimentary laptop, guys. So as far as like the trading, once you join, you'll be right in there, right? You'll go into the chat room right away. So there's no delay, none of that stuff. You'll have access to Benzinga Pro immediately. You'll have access to all the tools, all the beta tools that we have there, which, as you know, we code ourselves. We have a team of developers and coders working every day to give you guys the best tools. So you will not see this anywhere else, what we have. You might see little pieces of people, like little news feeds and things like that, but that's just 1 out of 1 million things that you can do in Pro. Pro is a beast. It's an animal. Nothing compares to it. It's my favorite tool. I would not trade without it. As a matter of fact, every trade I get in, it's because I'm looking at it on my Pro with all my filters and, customizations, all that stuff. So do you guys have any questions on Nic Chahine's options mentorship? Okay, I'm here just to answer some quick questions because I do have to call some of you guys back. So does anybody have a question here on the Zoom part or the YouTube part, so that applicable to Canadians? Yes, we love Canadians. We're in Detroit. We're neighbors, man. So definitely hit me up, James. You got my number there. Let's see. Let's let some questions roll in. Let me know. Throw your questions, guys. Just bombard me with questions about the subscription, okay? Is Nic only showing options? Yes. So this is an options mentorship. We're literally holding your hand throughout the whole way. We're showing you how to pretty much trade options. And look, it's just more than calls and puts, man. There's a lot into it, Jasmine. So yes, it's the options education. It's the fundamental reading of the markets. It's really understanding the market scenarios, the potential scenarios, what variables go into those potential scenarios. It's just understanding the market, right? A lot of people just jump into the market with no concept or knowledge of calls, right? All they're hearing is gamma squeeze to the moon. Well, man, that's how you blow up your account. And I'm talking from experience, right? So we all have a learning curve, right? But I can tell you that my learning curve just went skyrocketing once I started really, getting mentored by Nic. So what will be the price annually after the 50% deal? You will keep it for the rest of at 50% forever, right? So next year, 50%, even if it goes back up to what it was, which it will, and we will take the laptop off, you will keep that 50% off, Adrian. So don't forget to email me. Don't forget to call me, because I'll be here. I'm gonna be working a little late. Definitely want to make sure you guys don't miss out on this. So keep coming with the questions. Jeff the man, when will the next session be? Next session is this Sunday. Like today's Thursday, tomorrow's Friday, right? So you get him in the chat room, and Nic comes in and out on the chat room on the weekends. And so the session is on Sunday. So if you want to join and you want to be part of our options trading group study, we do that on Sundays. Okay, you will be able to access it. So just want to make sure that you guys, know what you're getting into, right? This is a serious options trading community. Like I've talked to people here that have 40 years in the game, 30 years in the game, and they love Nic's style. Like Nic has a following, but imagine having that and like close to this one-on-one mentorship that you're getting. So I know that I've paid a lot more for less, and I get a lot of people on the phone who tell me the same thing. So I'm telling you, this is for retail, which is why we're making the price, definitely in the affordable side, right? Okay, let's see what other questions we got. Keep coming with the questions, guys. Can't wait to do my first option. Jacqueline, That's such a blessing. Like that first option has to definitely let me know. We'll throw an air horn for you. Okay. Jim Cruz, thumbs up, right back at you, my friend. What tools are needed outside of Benzinga Pro, like Thinkorswim, anything else? Currently, Quest Trade. You can make your trades from wherever you want, to be honest. Obviously, there's different preferences, and some people might like this one for that. You know, like they might like this brokerage for this and the other one for that. That was my experience. I've tried about 7 brokerages. MagTac, having issues signing up. What issues are you having, MagTac? Are you using the link there that we put in? Yes. Okay. Well, I'm gonna try to go in there. Okay. Let's see what it shows me. So I checked it a couple minutes ago. It was working fine. Make sure you're clicking annual. Okay, guys. Make sure that you're doing the annual. That's where the laptop comes in. All right. So I just opened up the coupon. The discount code is NIC50, capital NIC 50. Okay. That is your 50% coupon. It at the bottom, it's going to say 1683. And then you put all your details there and all that stuff. And yeah, so it seems to be working to me, Mac, but let's do something. Just send me a quick email. I'm still going to be working. I'm going to call you. Okay. So send me an email. I'm just going to drop my information here one more time, because I know that we were so focused on the education that, you know, even I got carried away. So yes, MassTac, don't worry. Can you just call me or email me so that I can just get back with you as soon as we end the stream, which will be in a little bit. I promise. I won't keep you guys waiting for too long. Curious if the Zoom session today was recorded. It's always recorded and you always get it. If you register for the event, he will always get it. We always get that question. So yes, MacTac, okay. Manuel, when can we expect the recording? I don't know. I need to talk to marketing. That's a different department, but very soon, very soon. MacTac, I'll be waiting for your call, brother. Okay. All right, guys, we're going to do a final round of questions. Please let me know your questions before I end the stream and I start making calls, because then I don't stop making calls. So throw your questions before we end the stream. Let's give some people here in the YouTube chat. They have some questions there. How does the options program? This is the options mentorship. So Gerard, definitely you got to call me because you're talking about something different. But don't worry, I can still hook it up. So people in the YouTube chat, I have not forgotten about you. I'm literally pasting, you see my information there, you see my email, my number. You have to do, it's very simple. Send me an email, okay? That's it, just send me an email. And I will reach out to you today, latest tomorrow. Gary, is this a full access version of Benzinga Pro? It's that and more. Okay. It's like the tippy top thing you could get at Benzinga Pro. So yes, you are getting the best of the best here, plus Nic Chahine, you know, plus the beautiful support. We have an amazing support team. It's probably one of the only places that you can talk to a real person. I know that I'm not going to say names, but I've called brokerages because of weird things happening on the platform, and I'm on hold for 4 hours. Like, I'm not, sorry, man. Like, I'm not going to do that. And we know that your time is valuable, which is why we have a support team literally almost 24/7. I'd say, like, very close to that. And we're always, you know, our goal is to help you. So yes, feel free to, you know, do all that stuff. Just know that deep down, you know, as a company, we do care about your success. You know, we're not like one of those companies that are making billions and billions of dollars and don't even have a damn phone number. You know who I'm talking about. So yeah, we do take customer service very seriously, customer support. EO, let us know which laptop is available. We have about 4 different ones. It just depends which one's available. We do run out really quickly. A lot of people are obviously into these laptops, it seems. So EO, my suggestion, email me, call me. You have my information there. YouTube, throw your last questions in there. Same thing for Zoom. Give me your last questions before I call some of you guys. Let's see. Do we get trades also? Shushila, yes. I mean, this is like literally the place for that. If you're looking for trades, the chat room is full of them. Okay, you got all sorts of varieties and types, and Nick will show you how to do all those trades. That's the beauty. It's not just buy here and sell here and talk to you 1 week from now. It's, you know, this is my thesis. This is my trigger. This is my entry. This is where I would consider selling for a profit. This is where I would probably stop out. You're looking at a logical, seasoned type of trade with Nick, right? We're looking for consistency. We're not looking for look, you'll get some lottos, but we're not going all in on those lottos, right? Let's just be clear on that. This is literally just so that we are able to diversify our options portfolio. Will there be any offers going forward? Jasmine, you got to call me. We have an offer right now, 50% off. With all this stuff that we just went over, Benzinga Pro, all the scanners, all the news feeds, all the Benzinga exclusives, all the articles that we write. We have hundreds of editors worldwide that are literally like just writing articles all day. And I find trade ideas like that. Like the other time I was looking at this, it was a meme stock, I think, and I was just reading an article on Pro, and the article was like, hey, thinking about buying this, look at these other stocks. And that's how I found SPRT, which I bought calls and I literally got a 10 bagger. So I got a 10 bagger just out of reading the news on Pro. So you can find trade ideas all over the place. As far as how to trade them, that's really where Nick comes in. So yes, you will get James. Thank you for answering all my questions. You're welcome, man. That is what we're here for. We care about your success. So that's why we're doing this. We're doing this so that we can reach out and possibly save a couple people from blowing up their account and start moving in the right direction, right? Great session. I loved it too. It's a great session. Probably the best one ever. Terry, you use trading view charts. I'm not familiar with that, but we do have trading view charts inside Benzinga Pro. We have a special package, so it's a different one, but you'll have to look into it. It's inside Benzinga Pro. Do we get Benzinga Pro? Sushila, so Benzinga Pro doesn't have trading, like you can't make a trade inside Benzinga Pro yet. We are beta testing some things out there. There's no timeline for that, but it is in the horizon. Okay. Are there any other questions, guys, that you have about Nic Chahine, about the subscription, so that you can join in tomorrow ready to go in that chat room? Okay, in the chat room, ready to go, and then ready to go for the Sunday session, because that is where it's going to get really interesting. A lot of things happen in the market. The Federal Reserve gave, what they always do. They came out. Then you have interest rates, you have bonds, you have yields, you have Bitcoin, you have all these things happening. You have oil, you have stimulus packages, you have Delta variants, Mu variants. You have so many things going on in the world right now, and thinking it's just about buying and selling right now, it's a lot of people that got in the market in 2020 are already wiped out and no longer in the market, right? Because stocks don't only go up. They don't only go up. Right? They go sideways, they go down, they go up and they go down, right? So having a plan is really what's going to help you stay in the market. So what's the point of making all that money in 2020 and then you lost it all in 2021 because you had no idea how you even got there? Unfortunately, that's the truth for a lot of people. So, and I don't want you guys to really make that mistake where you just, you feel that the market is going to go up forever just because CNBC says so, right? You need to do your own research. You need to be able to surround yourself with the right community, right? If you surround yourself with a community of pumpers, like you're going to be holding the bag all day, man. So if you surround yourself with a smart, educated options trading community, it's different, because you actually have people that know what they're doing, people that understand the market and options, and aren't, you're not going to hear these things like to the moon and all these, oh, gamma squeeze forever. Like, we need to be real about trading because we don't want you to get hurt. We want you to be successful at it. And part of that is setting proper expectations. So I have a question in the YouTube right now. If you buy the program, how much do you need to start trading? Let's say you have, with $100, I don't know how much you can do with $100, but I definitely think you might want to cushion up a little bit before you start. Make sure you get ready. There are people that have started with as little as, 400 or 500 I've seen. But yeah, you definitely need to have capital so that you're able to invest in trading, right? So definitely important. The day trader, thanks for the question there. Sushila, okay. Raphael, if you sign up now, is it going to be 50% off forever? Okay, I think I did that question last time, and the answer is yes. 50% is forever. Okay, so you keep that 50% off. So when it renews next year, because this is a yearly subscription, you will keep that 50%, right? Maybe somebody else pays 4,000, right? But you're going to keep that you're going to keep that 50% off forever, right? So it's like a lifetime discount. So yeah, you'll keep it up, Raphael. And let me just post the link here for you so you don't have to, click too much out of here. And then there's another question there. Will I ship the laptop to other countries? We definitely will. We will do our part about that. If customs, customs is not being helpful, that will work something out. But yes, we do our best effort to send everybody their laptop. I've sent laptops to people in Cambodia, Ireland, Indonesia, Brazil, Mexico, Canada, all over the US, even Hawaii. So literally we sent a laptop to Hawaii the other day. So yeah, don't worry. We'll do our best to get you the laptop. And yeah, that is included. That is totally complimentary. Okay. Complimentary. It's a gift. First rule of trading, don't lose money in the market. I love it. Yep. Is that Warren Buffett who said that? All right. All right. Any questions? Any questions? Sushila, call me, guys. All right. I'm about to log off here in a little bit. So I just don't want to leave you guys hanging. Sushila, if you want, you can send me an email so that we can have a little bit of a deeper conversation and get to know your style of trading and really, so that I can explain a little bit of how this can benefit you. I know we all come from different places, but when it comes to options, I feel that we're all making the same rookie mistakes when we started. And if we can help you in any way, right, to get on the right track, we will. So Sushila, please call me or email me at the number that I've been posting nonstop here, so that we can talk and we can get familiar here with the option strategy. Will the laptop come pre-installed with Benzinga software? Well, I mean, we're browser based, so yeah, you'll have Chrome. All you got to do is open Chrome and you'll have it. That way you're not using all that memory on your computer, unlike other platforms. So yeah, you can, it's your laptop. Okay. Let's just be clear about this. This is y'all's laptop. You're not renting this. You're not leasing this. This is yours. Give it to your kid. Mine Bitcoin with it. Use it for work. Have a trading journal. Do whatever you want with it. It would be great if you can use it just for trading. That's what I would do with it. I'd have a little trading journal and everything. But more importantly, you'd use it. It would be really good if you can use it for pro. Just have your pro open, right? Because I have like 6 computers on my desk, and some of them are for work, some of them are for other stuff and all that. And sometimes they get slow, right? So then I have a dedicated computer for my pro because I don't want my news to get slow or anything like that. Okay, and the 50% off is for the annual. Okay, guys, the 50% off is only for the annual, and only the annual gets you the laptop. So you do want to get that laptop. You save it like a grand instead of paying month to month, and on top of that, you get a laptop. I mean, there's no better deal out there. Huddler, is the 50% off true for lifetime for the monthly as well, or is it only for annual? It is only for annual, my friend. Great question. Mr. Patel, what kind of trades are usually posted and discussed? I'm more of a buy and hold, sell patiently, not scalping though. I don't like spreads too much as I pay commissions and they are not worth risk for myself. That's an excellent question, Darshan. We talk about every single type of trade out there, right? And obviously, if you're in that situation where you pay commissions, a lot of people are in that situation as well. But it shouldn't really impact much like the way you're trading. Because you want to be on the right side regardless if you got to pay a 2-cent commission or something like that. But Nick is familiar with all these different types of trades. He's going to be giving you the best type of trade possible and a lot of education. You guys don't even understand like how much education you get. It's a lot, and it's a lot to the point where like I've learned a lot and I can vouch for it. I'm not here to talk about my trades, but I definitely want you to know that I've learned a lot from Nick, and he's helped me improve a lot. Okay, do you have, all right, so we're done with the YouTube questions there. Zoom, you're welcome, guys. You're welcome, guys. You're welcome. Do you have approximate specs on the laptop? It's gonna be 8 GB RAM at least. something like maybe 12, 13-inch screen around there. It will depend on the wholesaler that has laptops available, because they are going really quick, and we literally only have like 5 more left. So it's going to be either Dell, Lenovo, Intel, Acer, just some of the main brands there. So Chuck, hey Rodrigo, send over an email when you have a chance. Absolutely, Chuck. I will answer everybody and I will get back to everybody. Don't worry. But just remember, the only way, literally the only way for you to get this deal is if you click on the link, all right, that I posted in the Zoom and on the YouTube chat. That's one way. The other way you can do it is if you call me or you email me. Those are the only 2 ways for you to get this deal. That simple. So I'm posting it again one last time before we do final roll call here. Terry, it is telling me my phone number. Okay, so let's do something. Terry, you already emailed me. Love it. Proactive. It's the best. It's the best like skill you can have in life. Be proactive. I see your email. I got you. Don't worry. I'll get back with you and I will give you the deal because you emailed me. So be like Terry. Get the deal. Email me, call me, be like Terry. Chuck, okay, I got your email, Chuck. T-Mac also email me. Okay, perfect. That's what you need to do. If you want the deal, it's that simple. You just got to email me or call me. That's it. Otherwise, it's going to expire at midnight. So, I can't do magic, but I can vouch for you guys doing that. Okay, final call for questions. Okay, does anybody have any more questions about the options mentorship insane deal that we have going on? I need to know if you have any questions or if we're all good to go, so that I can get back here to my friends and call Terry and Chuck and James and Sushila and all you guys. Okay. I don't see questions coming in, so I'm going to assume you're all set and you're just waiting for me to call you, which is great because now that's my favorite part of the day. So guys, I want to thank you all for being here. Thanks for taking the education seriously. If you don't do it for yourselves, nobody will. If you don't start making informed financial decisions for yourself, somebody else will. That means that you're going to lose money. So start looking into the education with Nic Chahine, because that is the only way. Literally, that's the only way out. Like how can we expect to be long-term profitable and consistent with no education? It's just insane. We're looking at too much Wall Street bets, too much GameStop. We have to be real, set proper expectations, because we don't want you to blow up your account. We're actually doing the opposite here. We want you to consistently grow your account and protect your investments and trades. So without any further ado, guys, just want to thank you for being here. Thanks for taking the education seriously. That's how you should do it. I'm going to drop my information one last time in case you missed it, or if you're just joining. If you're just joining, by the way, you missed a hell of a session here for options, but you can still get the deal. You just got to call or email me and I'll take care of that. So appreciate you guys. Appreciate you, Jacqueline, John, Jim, MacTac, Chuck, Shiley, everybody that's been here. I appreciate you so much. Thanks for being part of the dream here, making sure that we all become better options traders, part of joining the best options community in the world. Okay.